There are so many ideas. There's some changes everywhere. Yeah. So the first question, ma'am, you asked about CPC level 4. CPC level 4 decision. CPC level 4, I think you have understood it, right? After doing the workshop.
Yes.
Okay,
But at the time of doing that 4th class of CPC, it was not very clear. There are many gaps. So it was just feedback to you that it's not very
that is true. Yeah, in fact, you see, I tried to show everything, like, in a very short period of time, because you see, like, we spent how many 8 hours total, gradually, like, we covered everything, right? So that's why, like, in CPC, so in CPC, just in a half an hour video, actually it is not possible, but still I tried to give you a thought process, or I tried to give you, like, how to go ahead. Now this is like, this is answered. You know how to choose that right mutual fund.
Now it's answered. Yes, we can move to the next question.
Okay, so that is done.
So some questions may not be relevant, so we just go through it quickly.
Okay, fine. Okay, so this one, second one is mentioned session of post 17.5 in the family budgeting bonus class. How often should budget be updated to take into account the market value of assets? Okay, this you can do, ma'am. How? So this is a beautiful question. How often we should revalue our assets? You can revaluation of assets, like, you can do just once in a year when you do the review of your plan. But a review of your plan, I always suggest, if you can keep on every 6 months, you should do every 6 months. Okay, so during that point of time, you are also, but see those assets, like when you are investing, when you have investments in shares or like, volatile assets, their market value changes, but otherwise long-term non-movable assets, like, properties, etc., they do not change that much. Okay, so 6 monthly is fine. 6 monthly, I think, it's more than enough. But the thing is, when you are doing again, you see, there are 2 rules. First thing is that there is, like, those who do not have knowledge. So we said, okay, every 6 months you do. Okay, look at that and adjust it. Now for you, it is not necessary. Only thing is that I would suggest that you keep track of the market. Market means equity market. Equity market, because overall, like, when you are coming here and market has, suppose PE has changed drastically, and it doesn't happen frequently. Okay, so when PE drastically changes, then my recommendation is being an active investor. So now I suppose you are an active, okay, I consider you as an active investor. Okay, so now what you do, like, now you look at the look at the market, and if you see, like, PE has changed, now it is time that you change your portfolio. At the same time, you do that complete review. Getting it? Okay, every time when you see, like, PE has changed quite a bit, you do a complete review. But otherwise, for layman, we normally recommendation is every 6 months you please have a review, and every year you must do a review. Okay, so that is the classical personal finance. But since we are not classical, like, we are above classical personal finance, so we do follow market. When the market value, like, P comes down, suppose tomorrow P goes to 30, immediately, whatever it is, right, immediately, suppose, after 1 month or 2 months P goes to 30, right, this is time, like, you should protect your money. Okay, so immediately you book profit, like, whatever, pay taxes, etc., and you shift for all your entire portfolio, wherever you have equity portfolios, right? Similarly, if tomorrow, after 1 month or 2 months, market comes down and PE comes to 15, 16, like that, and at that point of time, what will you have to do? You know it already, right? You shift to a mid-cap fund if you really want to go aggressive, and that is what recommended. Okay, shift to a mid-cap fund. Like, for all your goals, wherever you have equity fund, you can shift to the mid-cap fund. And some of the goals you may not, like, you don't want to. That is also fine. Okay, so this is a goal. I don't want to play mid-cap because I am conservative here. This is very crucial to me. Okay, that's fine. Okay, so now that's how, for us, those who are knowledgeable, so we must track the market, and accordingly we keep on changing. So let us not have a, like, okay, but every 6 months you must do, once you have a look at it. Okay, but recommendation is, since you are expert enough now, or even if you have not become expert as of now, but slowly, like you will become. As Mr. Chetri, he said, right? So it took him 3 months to get that expertise and make a flawless plan. Okay, so that's okay. That's okay. It happens, right? Okay, so that's the thing. So how frequently you should keep on monitoring the market, and accordingly you should keep on reviewing your plan. Okay, that's the best way. That's the professional way. Okay, understood now?
Thank you.
Okay,
Thank
so next
just
there are a lot of
question.
Yeah.
Right, just an add-on question to that, sir. Like per goal, how many types of investment should you have? Because I mean, I think all of us were Rajnikants. So should we look at like 2 to 3 per goal? And retirement fund saving starts today, right?
True. You see, for you see, one fund is enough. You're getting it?
Per goal, one fund.
Yeah, for per goal, one fund is enough. In fact, there are a lot of, I have some clients where I'm managing their fund. So I'm managing one fund for all their goals, because all the goals are of that nature. Now tomorrow, if you say like, okay, no, this is the goal, I want to go aggressive, right? Right now, say, okay, this is my thing. Okay, this is how it is. Okay, there are a few, after some time, if you say, no, now I want to go conservative with this particular goal. For example, suppose you have a goal for your kids' education. You may not want to take risk. If you don't want to take risk, then you'll have to go for a debt fund. So when you are going for a debt fund, you have already selected one debt fund. At the most, you can select 2 debt funds. Okay, something happens to this debt fund, and this debt fund will be there. Okay. Similarly, equity fund also. Equity fund, like we got Canada Robeco, we got Axis Blue Chip, we got Quant. Okay, I think these 3 are the top 3 funds in large cap. Okay, most probably that's what I can. Canada Robeco I can remember. Quant I can remember because I have been buying them for my clients. So now these are the 3 funds. Okay, you say no. I am very as I'm saying, okay, I'm picking only Canada Robeco. Something happens. If something happens to Canada Robeco, then I'll switch to Axis, or maybe I may switch to Quant focused fund or something, whatever is the name. Okay, exact name. Okay, so. Or if you think no, I don't feel comfortable. So okay, fine. Then you go with number 1 and number 2. That's it. You go number 1 and number 2, whatever category, probably Canada Robeco or Axis Mutual Fund or Canada Robeco or Quant and something. Out of these 3 are the main top, I believe. Amongst the top 5-star top large cap funds. So you just take 2. Okay.
Thank you.
Got it. Okay. So there are so many questions, right? Post bonus 5 equity optimization. What are the index funds? You have understood it, right?
That we've understood, yes.
Now you have understood
it. Yeah. 30 and 50, yeah. It was not clear at the stage when I wrote it.
Okay. So now definitely. It takes time, right? It takes time. After doing MBA, I was very much into equities, but when I came to the practical field, when I had to really apply all this knowledge, then I was thinking, oh my God. So what is that? What is sometimes I had to call up my teacher also. Sir, I'm facing this problem. Please help. What to do, right? So this happens, right? And we are day and night into this equity only. But even then, sometimes I get confused. We need to take help from somebody who are more knowledgeable. That's pretty common. That's normal. Okay. After some time, you will become expert. That's for sure. Then again, in debt optimization, 8.0, the PV is given as positive ₹95. Now you have understood it. Debt optimization, PV is given as positive ₹95. If the cash outflow shouldn't be at 95 minus, yeah, this is true. In the minus 95, it will be. PV is always minus 95 because we pay. Okay. But what happens? That is true. What you are saying, because when you do the calculations, you will always get it minus 95. Okay. But sometimes what happens, when we are talking with each other, we say minus 95. We say, what is the price? Price is 95. Okay. So you do not give 95 minus 95 because everybody knows price means we'll have to pay. Right. Okay. So might be I cannot remember exactly what was that, but it should be like that only. Since you have got minus 95, I said ₹95. Okay, that's fine. So because it is understood, if it is a price, you will have to pay. Right.
Right. So I vaguely recall, I think it was a typo in your presentation. So I mean, again, it's like feedback. I just noticed.
Oh, is it? It can happen.
You might want to go back. That's why I mentioned the time.
Yeah, 8.08 you said. Yeah. Right. Okay. Let me see. Okay. It is in a video, right?
It is. It
It
is.
is. Okay. Okay. I'll go through it. Okay. Definitely I'll go through it. Then again, are zero coupon bonds also more affordable? I think I know we discussed this. Can you remember
Yes,
zero
yeah.
coupon bond?
This I asked.
Okay.
Yes.
Yes. Yes. Sir. Okay.
And
Then
the
after
answer was like it doesn't. It depends on the fund, right? Like doesn't
what?
matter. And the answer was in the workshop. You mentioned that zero coupon or with coupon, it doesn't matter. I mean,
Doesn't matter.
you'll have to really study it.
Yeah, we'll have to ultimately it's the return, how much return I am getting. Okay, but of course, if you want, every sometimes what happens, I need every year I need some income. Okay, if that is the case, then you should go for coupon. Okay, so you say 20 years. No, nowadays there are 100 years old bond also, and there are bonds. This time we didn't see it. Last workshop when we are looking at some bond funds, we found there is one bond only coupon is mentioned. That's tier to actually bank tier to capital bonds, right? You don't have to understand that much. Only coupon is mentioned. Okay, there is no maturity. We have this time we have seen there is a coupon and a maturity date, right? So there we saw only coupon. Only coupon means they will give you the coupon every year, and it is perpetual till that bank, Allahabad Bank or somebody, right? So now till that bank exists, whoever is having that particular bond, bonds are they keep on changing hands. Whoever is having that particular bond, he will be continuously getting that much of coupon. Okay, so that's sometimes it is very awesome, particularly for retired people. When the interest rate goes up, okay, when the interest rate goes up, you see, now interest rate is very high, right? Again, most probably RBI is going to increase it, most probably, but it will be difficult. But I know this is necessary. Why it is necessary? To me, they should have increased it gradually, much before, much long time back, but they didn't do that. Okay, to appease the government or whatever is their thinking, I don't know. So suddenly they had to now, okay, suddenly it is going up. Okay, so okay, increase it. Most probably they are increasing it again. Okay. So now when the interest rate increases, what happens? We know in the workshop we have come to know, or else those who have not done the workshop but have gone through the videos. So when the interest rate goes up, bond value comes down. Okay, at that point of time, if you buy such kind of bonds where there is no maturity, okay, there is only coupon. Okay, so you buy at a very cheap rate, and for your life, and in fact now after you next generation, they will keep on getting the coupon. So coupon is fixed. If they are saying, say 8 rupees, 8%, okay, they say 8%. 8 happens if you invest 100 rupees, you will get 8 rupees, right? So 8 rupees every year it will come. Okay, so that way. But of course, we have already started. Normally we prefer going through buying, not okay. Oh, you have got mute, right? Yeah, you can unmute, ma'am. I have asked you to unmute. Okay. So now we prefer buying not bond directly, but we always prefer buying mutual fund, bond mutual fund. Okay, but still this perpetual bonds, if you get a chance somewhere, you can consider looking at the, now you know how to consider the rate. Okay, if you get very good rate, I think it is worth buying. Okay, and they are very safe. Like say Allahabad Bank. So I don't think they will sometimes they will go bankrupt or something like that. Okay. Okay. Yes, ma'am. Can you unmute, ma'am? You have gone mute. But these are your questions. You have answered your questions. There is no more questions. Yes, ma'am. Done. Cannot unmute. Okay, I have already this thing. I don't know why. What is happening? Okay, now, yeah. Now you have gone on. Yeah. Yes, ma'am. Yeah, you can unmute now. Now you can talk.
Okay. Sir, can you make a recommendation? So I want to open a coupon-based debt fund for my parents. I mean, they have their own retirement fund. They're ex-military, so they get pension. But I want to open one. So do you have a recommendation of a name of a debt fund I can open for them?
You see, as I have told you, right now it is not coming to my mind. Okay. So there is some, I think SBI Magnum wants, you see, every time, whenever, what I do, in a workshop, normally I look at it, right? Every month, I get that workshop, I ask people, okay, which fund do you want me to see? They say, okay, this time. either short term or medium term, right? So right now, so we keep on changing, right? So we keep on looking at, but Canada Tobacco is something why I can remember because I bought it myself for my clients, and then most of the time, consistently, most of the time, whenever we look at large caps, always that surfaces, like that comes up. Okay, so same way, you can also choose debt fund. Same way, like I have shown it up. Go to the whether it's a long term or it's a medium term. Look at the returns also. Okay, look at the returns. Let me tell you, for your retired parents, best thing will be if you get a short term fund, but having good return historically consistently. Of course, it should be 5-star. Okay, so if you are getting a shorter term fund, so why short term fund? Because short term fund, your capital is protected. We have already understood it, right? Short term fund means your capital is protected, and if you are getting good returns, so that's because of the expertise of the fund manager. Okay, so if they can, despite having a short term fund, if some fund manager can give you a good return, I think that kind of funds are best for retired person. Okay, so you'll have to do some research. I cannot remember exactly what it will be. So do some research, and then I'll do one thing. Find it out. At least 2-3 you find out, and then we'll see next week. Okay, ma'am. Okay. Homework. Your homework.
Okay, sure, sir. And one more question I had.
Yeah. Can you be like it's? I'm not. I cannot hear you. I don't know what happened.
Can you hear me better now?
Yeah, it's better. But earlier it was very good. In fact, very clear. Oh, you have become again. Okay, please unmute. Please unmute.
Yes, can you hear me now?
Yeah, I can hear you, but voice is faint. I don't know why. But yeah, you can go ahead.
Okay. So my next question, my last add-on question to this is, it was something I asked in the workshop also. Does the size of a net asset matter? Like for example, Access Focus 25 is huge, but I invested in it. It was very bad. It's giving me 0.5% negative. So my question is, should we also look at the net asset of any mutual fund in equity that we invest?
Yeah, I think we discussed this thing. Of course, towards the end. So I thought like might be you were overloaded with a lot of information and knowledge. You see, sometimes it matters. Okay, if net asset value is very small, okay, net asset value, total asset size. This is called AUM, asset under management. If asset under management is very small, what happens after some years? They merge it with some other funds. Okay. So then it doesn't, of course, they will inform you beforehand and they will give you a chance to exit. Okay. So when your AUM is very less, but you see, like, we are not that big guys that, if you invest in a small AUM, it will fluctuates or something. This doesn't happen. Okay. But what can happen if it's a very small AUM, then they find it non-profitable continuing, then they merge with a big fund. Okay, they have suppose an SBI have one big fund, and they have this fund, and this fund is not doing well, so they will merge it. So when they merge it, what is the problem? Problem is, suppose we want a debt fund. Debt fund, we are really looking for, say, long duration fund. Okay, but they will be merging it with a short duration fund, which is a bigger fund, because they are finding it very unprofitable, so they will merge it. And they will tell you, they will give their own, they will never say like, we are finding it difficult, so we are doing that. They will never say that. They will say their own stories. Because of this, we want to give benefits to this. That's why we are merging. Okay. Don't listen to all this stuff, because now you have knowledge. You look at whether this new fund serves your purpose, whether it is 5-star or 4-star. What is that? Everything, like, you have understood it. Everything you look at. If you think, yes, this is serving the purpose, you can go ahead. Otherwise, you'll have to exit. So that is a one risk when you are investing in not very big fund. Okay, small fund. But yeah, it's most of the time, like, you'll see 5-star funds are quite good enough. Okay, well, most of the time 5-star funds are quite very. I think amongst large cap, that Quant Focus Fund or whatever is the name, exact name, I think that is the one fund which is I think smallest of all. But it's a 5-star, and you see the alpha is 12. huge, unbelievable. Okay. So I don't know, like, how they are, like, it's a really salute to that guy. And he was, yeah. Okay,
Sure,
got
sir.
it, ma'am?
So my other doubt was again on alpha and beta. I don't want to take up too much of everyone else's time here, but if we can go through that alpha beta concept, it was not very clear to me from the MFs. Alpha, I know it's doing better than the average, and beta, I could not understand very clearly. We rushed towards the end, or maybe I was tired, overloaded, like you said. So if you could, touch upon that.
Okay,
Please.
alpha you have understood, ma'am, right?
You can explain once more.
Okay, fine.
So
Okay, you see, alpha and beta is simply, it is, okay, just a moment, I think, you see, I am just trying to make it like, how it is, what it means. If you understand it that mathematical way, that's good. If you do not understand it mathematical way, don't worry. Okay, so I will make you understand in a very simple layman language way. Okay, you see, mathematically how it is, mathematically, suppose there is a alpha. Okay, there is a alpha. Alpha is normally, okay, alpha. Okay, alpha normally it is being it is like that, alpha. Okay, so alpha is say say how much, 7%. Okay, alpha is 7%. And beta is written like this. Okay, it's like this. Just a moment. Okay, you just understand the meaning. Beta is say 2. Beta is very high. Now the beta will tell how this particular fund, okay, it's actually a portfolio management subject actually, how this particular fund or stock or whatever, okay, how this particular fund will move according to beta. Okay, sorry, how this fund is related to the benchmark. Benchmark means you can consider as the market, right? So now, how, suppose there is a Nifty fund. Okay, let me be very specific. Okay, so then it will be easier for you to understand. Suppose there is a Nifty fund. There is a Nifty fund. Nifty fund, they will invest in 50 companies. Okay, 50 companies, and their benchmark is Nifty. So they will follow Nifty only. Now, suppose one Nifty fund, this is okay, this is not real. Let me tell you, okay, everybody, somebody may say, no, sorry, saying less, or I know it's not correct. Okay, it's not correct, I know that. Okay, but still, for our understanding, okay, because Nifty fund cannot have a 7% alpha and 2 beta. Okay, I know that, right? So, so anyway, not Nifty fund. Okay, let me tell, I cannot say. Say any large cap fund. Okay, any large cap fund. Okay, say large cap fund. Large cap fund is beta 2 and alpha 7%. Now that means, suppose the market means Nifty, say benchmark is the Nifty. Okay, Nifty moves by say 3%. Okay, Nifty goes up by 3%. Okay, so now this large cap fund will go up by, so this is the Nifty return. Okay, so this large cap fund, so now this large cap fund on an average, okay, it keeps on changing, but on an average, like, over a period of time, normally they consider for 3 years. Over 3 years, like on a value research online, they consider 3 years, right? Over a 3 years period of time, what is how it is behaving? This large cap fund will go up by 3%. Okay, this 3% into 2. This 2 is beta plus 7%. Understood? It's a huge. Okay, this doesn't happen. That's why. So 6%, 3% into 6% plus 7%, 13%. Got it? So now the Nifty benchmark goes up by 3%. This particular fund is expected to go by 13% plus minus. Understood? So this beta says in relation to the market how fast it is growing. If it is 2, that means large cap fund, this fund will go up by 6%. If the market comes down by 3%, then also this will come down by 6%. Are you getting it? Suppose there is a negative return. Okay, suppose negative return. Nifty is giving minus 3%. Okay, then this fund will give you minus 3% into 2 plus 7%. So is equal to minus 6% plus 7% is equal to 1%. Okay, got it? So if Nifty goes up by 3%, this large cap fund is giving 13% return. If the Nifty goes down by 3%, this large cap will give you 1% return. Okay, so that means, so this is mathematically, this is like, it is like this. Okay, mathematically. Now what we understand, like as a layman, you just understand beta means if the beta is 2, that means if the market goes up by 1%, this fund will go by 2%. If the market goes down by 1%, and this fund will go down by 2%. That is beta. What is alpha? Alpha is even if the market doesn't move at all, it is going to give you 7% return. That is alpha. Okay, so in this case, even if the market doesn't move at all, so it's a 0%, 0 into 2 plus 7, so means 7% return it will give you irrespective of market movement. That is alpha. Understood? Okay.
Okay. So the way we use this knowledge is high beta is high risk.
Exactly, ma'am. Yes, you got it. So like, you know, you got it. Yeah, that's the truth. High beta means high risk. Yes.
So we don't want to do, like, it depends on what our objective is.
Exactly.
Short term, then we take high beta.
Exactly. So
we don't want a high beta.
Yes.
Do we have a benchmark for risk, like high risk, mid risk, low risk?
No, no benchmark. It's up. It depends on you.
Okay.
Okay. And that's why I'm saying what I'm saying. Like, I always go for alpha because alpha is risk free. Risk free means it is not dependent on the market. Alpha is basically the capability of the fund manager. Of course, beta is also capability of the fund manager, right? But still, alpha is like, you know, all the fund managers are on creating alpha. How much alpha they can create.
Okay, and the alpha is published data, right? Like it's not going to vary from website to website.
No. Alpha. Now what happens? You see, like a different, like, you know, we are following Value Research Online, right? In a Value Research Online, they have their own methodology. They take 3 years return. Okay. So now when the methodology changes, it changes little bit. Okay. But you see, normally you will see most of the time, those who are 5-star funds, most of the time they are 5-star. In some cases, suppose, you know, Value Research is giving 5-star, Money Control can give 4-star in some cases, but by and large, you will see they are all 5-star and 4-star, they remain 5-star, 4-star. So depending on the methodology, like, you know, it can slightly change, but this is how it is. Okay, by and large, it will get the same thing.
Okay, thank you.
Understood? Yeah. So but you know, I loved it. Like, you know, you have really understood it. Okay, so that's great. Okay, so that gives, like, you know,
so
yeah,
there will be more questions, I'm sure.
Yeah, definitely you'll have more questions. Then only I don't think, like, you know, you have any finance background also.
No. I'm science. I understand maths.
Okay, so that's like, you know, yeah,
technologies, right?
Yeah.
Okay.
Yeah, Saptarshi has already gave y is equal to mx plus c is the alpha and m is the beta. Saptarshi. Okay. Meet and small we have. Okay, there are a lot of questions. Okay, got it, ma'am. Okay, any other question?
Nothing at the moment, sir.
Okay, as of now, nothing. Okay. Okay, so after that, okay, first I'll Radhakan, Bhaskar, Nildas, I'm coming to you guys, right? First, let me answer all these questions which are here. Rahul K, are you there? Okay, Rahul K, can you just raise your hand? Can you just, or you can switch your video on. Video means, yeah, camera on. So then I can see you, then I'll be able to discuss with you. So I don't know why, whenever using mobile. Okay, so using mobile. Okay, fine. No issue. So, okay. Mention that. Okay. So in many of the videos so far seen, the average return on investment used to calculate desired target amount or monthly SIP installment was 9 to 12%. Can we expect a greater ROI over a longer duration, or is 9 to 12% is the ideal ROI that an intelligent investor expects? No, intelligent investor expects more, much more. Okay, but 12% is something like after finishing the course, that should be your benchmark. Okay, when you say, okay, I am confident that I'll be able to make 12% return over a longer period of time. Short term, nobody knows, right? Even like Rakesh Jhunjhunwala, he used to make losses. Warren Buffett make losses, like, you know, we get it in the TV and everywhere, right? Warren Buffett lost this many $1 billion. Okay. So that's nobody can overcome. But you are expected to make minimum 12% return after doing this course. Okay, that much confidence you must have. Okay, that's why I'm taking 9%. Why 9%? Debt funds are normally 9%. Getting 9% return on debt funds is big, because debt funds you cannot do much. You have very small, it should be you don't get much this thing. You cannot play much with debt funds. Okay, that's what I can say. Okay, but equities, yes, you can play quite a lot, and that's why like our main focus is on equity. And equity, you must get 12% return after completing this. If you're confident, okay, I can get 12% return, so that means like you have understood it, right? Most of the 98% people take 1 to 3% return, right? That's what they do. But what happens? These are all statistics, right? Because I was in that. So what happens? Wherever they are making money, they say everybody, okay, I have made this much. But yeah, there are a few people out of luck. There's a luck factor, right? Out of luck. Jhunjhunwala made it not because of luck, because of his knowledge, right? All these Peter Lynch made it not because of luck, because of his knowledge. Warren Buffett made it not because of luck, because of knowledge, right? So there are so many. Got it? Understood? Okay. So that's why. So you can definitely, after completing the course, once you understand it, over a longer period of time, you should be able to make much more. You'll have to follow. You'll have to follow whatever we have understood here. Okay, you'll have to follow that strictly. Okay. Understood strategy after your master class? Yes, I know that. Not master class, workshop, 8 hours workshop, right? Okay. 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 Yes. Yeah. Yeah. I know that, right? Happy Singh Maniwala. Ho gaya, you have done it. You could make the plan. Yes, I know. Okay. For somebody, like immediately you know. For somebody, it may take some time. Okay. For example, I keep on saying, like that Mr. Chetri. You have seen, like he said, right? So I took. He was very perfect. Like every penny where he's going, all his goals and all. And he said, like it took him 3 months to understand and perfected that, he made this plan perfect. Okay. Okay. Then after that, next question is Bhaskar. Bhaskar, okay, I can see your hand. Can you unmute yourself?
Yes, sir. Good evening.
Good evening. Okay. Can you switch on your TV? TV means, yeah, camera. Can you switch on your camera so that, like, I can take you inside?
Can you see me, sir?
Not yet.
Sometimes when I have some problem with my video not working in Zoom, but it works in the.
Okay. Okay. No issue. You can switch off your video. Okay,
sometimes it happens. Yeah.
Okay. No issue. You can switch off. Only thing is that I cannot take you in, but I really wanted you today. Like I'm facing this problem. I don't know. Like they have done something. So everywhere, whenever I click somebody, so like what prompts remove. So okay. So I don't know. Like I click your name and I see like whoever like whatever name I click, so immediately prompts comes remove. I don't want to remove anybody. Okay. Okay, Mr. Bhaskar, so I am going through your questions. So what you asked me.
Sorry.
Okay. So during equity portfolio optimization session, you have walked us through the website to check P ratio, color, and accordingly we make choice of LCMC and index funds. Beautiful. Okay. When you mention switch to debt funds, then red hot color, you mean if it is a 6 months SIP in equity market, do not renew and now starts lump sum investments in debt market. Yes, exactly. You got it. Okay. That's right. Because
basically based on the goal that you set, right? Like, for example, if retirement is a goal, right? You choose maybe one large cap fund, one aggressive hybrid fund, one mid cap fund. Okay, that is one portfolio for that goal, right? At some point of time in this process of where you are doing a SIP for one or 2 years and it's going on, and in case the star ratings of that fund goes down. So far, what I've done is I only invested in 5-star and 4-star rating. Beautiful. But once the fund star rating goes to 3, I stop contributing to the fund, but I don't redeem the fund because the fund rating has gone to 3. I leave it there. And I can switch to a new fund.
Okay, why you are leaving that money with that somebody who cannot generate proper return for you?
That is where, based on the goal, that is what something I was not sure how to go about it.
You'll have to switch. You'll have to switch.
I'll share my screen if you don't mind.
Yeah, you can share your screen. You'll have to switch it. Because otherwise no point. Because tomorrow, suppose if that guy he becomes 2-star, he becomes 1-star. After that, this completely 0-star, no rating. What will you do?
Right. I'm unable to share my screen. It says participant. Yeah, now I'm able to do it. Yeah. So if you're able to see my screen, I'm talking about here in this case, Mirai large cap. I'm just unlearning my old knowledge now. In this process, actually, I have picked up this fund, even though it was 5-star, based on looking at the expense ratio. But I realized when I look at the alpha of this, it is actually minus 0.07. I just started a 6-month SIP about 3-4 months back.
Okay. Mirai asset large cap 5-star. Alpha is minus
0.07.
Okay. So there are so these are fine.
Okay. The other question that I wanted to ask basically was in the ELSS funds, I have 2 funds that I have predominantly invested for tax savings in the year of 2017 and 18 basically. And today I see these both funds are in lesser what you call star ratings.
Yeah.
One is Franklin Tax Shield fund. It's a 3-star rating today. And Aditya Birla Sun Life Tax Relief Fund, it's 1-star rating. And both of these, due to this, I see that their alpha is very low.
True.
And since it was a 3-year lock-in period, I couldn't remove that money. But now that the market is improving, is it a good time to, since I crossed the lock-in period, right? Is it right time to redeem now? Or basically when I go through the VRO site, right, and I've been investing since 2003, 2004. Initially started with ELSS funds, but later on in 2018-19, I started investing into aggressive hybrid funds and mid-cap funds.
Okay. So now you see aggressive hybrid is for us, aggressive hybrid is a
balanced fund. Yeah.
It's a balanced fund, right? It's a balanced fund. Somebody who doesn't have knowledge, they go for balanced fund. Okay. So as you know, right, since you have knowledge, so you can, but again, after having knowledge, if you do that, then that's fine. So you have knowledge, so you still do that. But most of the time, what happens? People go for balanced fund when people have no knowledge. Okay, so what to do? Okay, they will ask normally, hey, should I go for debt or should I go for equity? Go for balance. I tell you, it's better. Okay, so but the thing is that, so in the balanced fund, what happens? Hybrid fund, what happens? You cannot take the advantage of valuation of market. Are you getting it? So now what we do, we go and then we harvest it. Market goes up from say today is 20, it becomes 30, PE, and then we take that entire 10% return or whatever. Okay, and then we take the profit, book that profit. We go to debt fund. We sit quite quietly, comfortably. Okay, so when it's a hybrid fund, you cannot play that, right? So, but still, if you have knowledge, then even after that, you are doing it, that's fine. But if you are doing it because your old things, whatever, earlier learning you had based on that, then I think there is no point maintaining this. This is the number one with aggressive hybrid. And again, Mire Asset Large Cap, it's a 5-star. But again, you have seen value alpha is 0.0 minus. And you have got a lot of good funds, in fact, quite focused, quant focused, Invesco is 0.3, Kotak Blue Chip. I think, what is that? I think that guy also has very good this thing. Alpha, I think, this one. What is the name? Canada Robeco has a good alpha. And Axis Blue Chip, they are, it has also a good alpha. Quant focused is also, you have already, it is there. Okay. So these are some fun. So you start switching, there is no point. Somebody is not performing. Why are you sticking to it? Okay.
Because, based on the knowledge that I've learned so far in these years, right? Tax return funds, even though they have a lock-in period, if you redeem the units after 3 years, rather than that, after 5 years, you'll get more better returns rather than removing the money after 3 years lock-in period.
No, now you see.
So that's where I was holding off those things and seeing if because of the market is improving and all that, if I can increase a little bit more profit from those funds is what the reason I was holding them.
Okay, now you see, suppose I have a fund, which is there are 2 funds. So you are holding in one fund. Okay, so and there is a holding in a fund, say A. Okay, so there is another fund B. Okay, so when the market goes up, the B fund is 5-star, A fund is 1-star. Okay, when the market goes up, right, which fund will give you more return? What do you expect?
The one which has more better rating.
Okay, better, definitely.
Yeah.
Okay, so now if you are sticking to this will not give you performance. Right? You know it. It will not perform you like that the 5-star fund will perform. Definitely. Okay.
So best thing is redeem this off and reinvest them somewhere.
Yes. Okay. And again, you will also get that. You may get that tax harvesting benefit, right? Correct. So that tax harvesting, and if there is a loss is also good, right? You can, when there will be profit, you can offset it.
Yeah.
You know that, these things again. I think I'll add one more. Chapter in the tax. Tax we have only one session, right? So we'll give another B session also, where we'll be discussing tax harvesting and loss harvesting. So if you can already understand that, that's fine. Okay. Sure. Don't afraid to book losses, because losses can be, sometimes it is very beneficial. You book losses, people are very okay, I'll book losses. Hey, this is good, yeah. Book losses, and you are shifting to mid caps. Now suppose market comes down. Okay, for example, and if there are losses, I don't want to book losses. I don't want to tell my friends that I have made losses. Okay, so that's the mentality actually. Everybody, in fact, the big fund managers, professional fund managers, they also have that. Okay, so instead you book loss is there, and then you shift to a mid cap fund. Next time when the market will go up, you will have profit, and if you want to book profit, you can offset your losses. Suppose here you have made, say, 10,000 rupees profit, and here you had suppose 8,000 rupees losses. So 10,000 rupees profit minus 8,000 rupees losses. Only for 2,000 rupees you'll have to pay tax. Okay, that too, only 10%. Okay, so those things you can look at. But main thing is that see, our main focus is always performance. Always remember that.
Right. So one question I had was, basically, now after attending your classes and the last workshop, now I'm looking into all my funds and trying to look at what NAV I brought those funds 3 years back or 4 years back, and looking at today's NAV rate, and if the fund rating has gone down in VRO, how much profit I made. And the other point which I couldn't take it, which I'm still struggling with taking a decision is, when is it the right time to exit out of the fund? When we looked at the PE ratio, the graph that we discussed during the workshop, we talked about, when we are close to the median, now that large cap is a good market, we started in funds. What is the strategy to exit out of the funds where I see, things are not working out?
No, in fact, strategy means you can take a decision. Today you can take a decision, right? Because now this is this. Okay, Sometimes let me tell you one thing. Since you are asking a very timing of the market, you are saying, right?
Correct.
So now how the professionals do, I am telling you that. Okay, I'm not saying that you will also have to do like that. Okay.
Right.
How the professionals do. Professionals means, suppose me, I am a fundamental analyst, right? Ultimately, decisions are taken by the fundamental analyst. Means looking at the valuations and market valuation, they take a decision. Hey, now we are going to buy this particular company, okay, or this particular fund.
Sure.
Okay. So now what will happen? So then they will tell the thing to the dealer. Dealer does the buying and selling actually. Okay. Fund manager, they do not do that. Fund manager take decision. So they take decision.
Right.
Okay, this within next 1 month or within next one week, we must buy this particular fund. So that order has been given to the dealer. Now what happens? Dealers, what they do, there are technical analysts. Okay, they look at the charts. Okay,
right.
So they ask the chartist, hey, we need to buy this. Should I buy right now or should I wait? Because within 1 week we'll have to buy. Okay, so now after that, this fund, the technicians, technical analysts, so they do the studies and they suggest, sir, please wait for some time. Okay, now this is the right time to buy or whatever, depending on the technical analysis, right? So now they will say, okay, no, so within 7 days, okay, no, let us wait for 3 days, then we'll see. Okay, but within 7 days, they'll have to buy it. So within that 7 days that they can do that technical analysis and all, and then they take a decision, they will inform me, sir, we are yet to buy because technically we believe it will come down further. But this goal has been set. Within 7 months, we'll have to buy it.
Right.
So within 7 months, depending on that, so they will buy. So they try to maximize the profit by timing it properly. Okay. So that's what the professional teams, they do that. Okay. But for us, if you know the technical analysis, you can fine tune it doing technical analysis. You look at the Nifty weighted market is whatever. Okay. If you want, otherwise, you see me nowadays. So I don't like, wait for, or I don't ask anything nowadays. Okay. Immediately I have taken this. Okay. Market P is 20. Okay. Let's buy. Okay. So I buy for my clients. I buy it completely. Right. So it's like that. I take immediate decision. Okay.
Sir, if you're able to see my screen, I'm sharing my.
Yeah, I can see your screen. Yeah.
So you can see here Franklin Templeton.
Yeah.
And I've invested 30,000, and today it's about 51,000, which is an appreciation of.
Franklin Templeton is which row?
Tax ELSS fund.
Okay.
Which we just.
14, row 14.
Yeah.
Row 14. Yeah.
So this annualized return is about 11.80%. And the other one which I wanted to show you was the Aditya Birla tax fund. You can see here the average period weighted was 1363 days. It's more than 3 years, which is what I completed my lock-in period. So it's giving me a return of 10.22%.
Okay.
So where my 67,600 grew to 97,135. My question was, shall I redeem off right away, or if I wait for another 6 months because the market is improving, okay, I can see something more better.
Okay, so now you see that's what the same thing. If you think are there any ELSS fund or any fund, now it is out of ELSS, right? Yeah. So now since it is out of ELSS, you see, is there any logic sticking to that, which is whatever return they have given, right? Yeah. But sometimes you see, there are two things. There are a lot of people who makes money more than fund managers, like the most sophisticated fund managers, and in fact Junjunwala also, right? Or Damanis, right? Junjunwala is gone, let him rest in peace. But there is a Damanis, right? So somebody can say, okay, last year I bought this, Damani sold this, and I bought this, and I made 135%. Damani sold this. He made only 10%. Does it mean that I am much more intelligent than Damani is? That's my luck.
Yeah. Okay.
But when Damani is making consistently some return, he is doing out of knowledge. Okay. Same thing with a fund manager. Somebody is having 1 star, 3 star. Sometimes he may outperform, but it doesn't mean, so in that case, there is so if you believe in that, then you have to go with all the 1 star fund. Okay, let's buy all the 1 star fund. Understood? Yeah, so that way, yeah. So he is 1 star. 1 star means that is his ranking, right? So yeah. So now I don't see any. Got it? Yeah, I don't see any logic in fact, sticking there.
Sure, sir. Thank you.
Got it? Yeah. Okay. Yeah. Okay, can you stop sharing that?
Yeah.
Okay, Rahul K. Vaskar, Lalit Kumar Varma. Lalit Kumar Varma. Lalit Kumar Varma, are you there? Lalit Kumar Varma. Rarakan one by one, huh? One by one. I am coming one by one. Lalit Kumar Varma. Vaskar, I have to okay. Okay. Lalit Kumar Varma. Lalit Kumar Varma, not there. Okay, just a moment. One by first, I think all those who came late. First, we take all the questions which are being posted while going through the videos because that's necessary, right? After that, we'll take direct questions, right? First, we'll take all the questions that has been already posted, right? While going through the videos. Repeating again because those I already this thing narrated it, particularly for those who are new. So this is how we'll go. Now, Saptarshi, are you there? After that, we'll start taking questions directly. Don't worry. Okay. But first, these questions will come first. Saptarshi, are you there? Saptarshi, yeah. Saptarshi, sir, can you raise your hand? Possible? Can you raise your hand? Click that reaction button, raise hand button, or okay, or you can you switch on your video now? Possible? Switch on your camera. You can unmute. Yes, sir. I can see you. Can you unmute? Oh, okay. Just a moment. Let me take you in. Add spotlight. Okay. Nowadays, I think they have. I think this is something. And now only if you switch on camera, then only I can take you in, right? So earlier it was not there. Earlier anybody I can take inside. Like it will. The screen will remain black. Okay. Suppose should I read the question?
Yes, sir. Yes.
Okay. Bonus 5A portfolio optimization equity according to the chart Nifty P ratio. Now it is green zone 21. I am having an SIP in Nifty 50 index 100% equity. Nifty 50. Okay. Would it be a good idea to invest lump sum around of rupees 1 lakh now? Why not?
Okay.
You have got it right. So only thing is that okay, you need my rubber stamp.
Yes, yes, sir.
Yeah. So,
Yes.
so you have understood it. Okay.
Okay.
So this question is answered. Any other question you have?
Yes.
Any other question? Yeah.
Yes.
Please tell me.
Today
Yeah.
I have posted one more question.
Okay, just a moment. Yeah, I can see this. Okay, just a moment. Okay, Manson. I have EPF with current value of rupees 21 lakhs right now. Where to put that amount? Should I insert in row under PPF and put that amount? Okay. So now this is for your planning purposes you are talking about?
Yes.
Okay.
Yes, sir. Yes.
So you can do that, or you can do that PPF, right? So you will continue with the PPF, or you will just leave it like this?
No, PPF is there and EPF is also there,
Okay.
and I'm continuing with the both.
Okay, you are continuing that PPF. You will be continuously. You will be continuously. You will be investing, right? So
Yes.
PPF, you can do one thing. Now PPF, you can take it as a take in as an investment, under investment. Let me show you. Okay, just a moment. It will take some time to open. Okay. So where we are making that investments now. So PPF can be one investment. So then you can like today's value, lump sum value or today's value, whatever. Like I'm going to say that you can put at 21 lakhs. The rest of the things becomes a part of plan. Suppose every year you will be investing this much. Okay. So that become a part of plan. I'll show you. Okay. Mr. Saptas's first question was. Mr. Saptas's first question was. Nifty PE ratio is in green zone 21.02. I am having an SIP in Nifty 50 index. Would it be good idea to invest a lump sum amount of rupees 1 lakh now? I said, why not? What is the problem? Okay. Okay. Somebody was asking this. Okay, just a moment. Okay, I'm opening it. Ajay, Vishal, got it? That was the question. Vishal, he wants to invest 1 lakh rupees lump sum. At 21 rupees, is comfortable with investing in Nifty fund. Vishal, got it? Okay, now I'm showing you this.
Sir, I have one more question. Like,
Yeah, please. Go ahead.
Right now you are discussing about if at this position Nifty 50 goes up to 30, then would it be a right decision to encash my Nifty 50 invested amount and switch to some mid cap fund, or I should wait for long term?
No, there are two ways. First thing is that, okay, as we have discussed, okay, first let us discuss this thing. Then after that, you raise this question again, then we'll discuss it. Okay.
Okay.
One by one. So here you see here what you can do. You can put it here as an investment. PPF. Here we have done PPF, right? PPF 7.1% you are getting. 22 lakhs you have already, right? You can put that 22 lakhs here.
No, in case of PPF, I have only 9 lakhs. In case of EPF, I have 21 lakhs.
Okay, so you can do one thing. Okay, so PPF you have 9 lakhs. You can put it here, 9 lakhs, right?
Okay.
9 lakhs. Okay, right now it is 9 lakhs. And then how much you will be contributing every year?
1.5.
1.5, 1,50,000, right?
Yes, yes.
Okay, this will be whatever is your times left and all. So you will get it here. Okay, EPF. So now in case of EPF, EPF, you know that percentage, how much percentage you are going to get?
Actually, I don't know, sir.
Okay, you don't know.
I can only see the passbook amount, and it is somewhat 21 lakh.
Okay, so now do you have any idea how much you will be getting at the time of retirement, lump sum?
I think it would be fair enough to consider 6.5 or 7.
Okay, so in that case, you put it here. This is where I'm giving here, this is when you are EPF, right?
Okay.
You can put it here, EPF, somewhere around 6 crores or something.
EPF 21 lakhs. 21
lakhs right now. At the time of retirement, how much you will get?
Oh, that I don't know, sir.
That you don't know. Okay. So now you can, in that case, okay, you can do one thing. EPF, how much you are contributing?
EPF actually it's something company is contributing and something
so your something is deducted. Yes. Okay. So yes. Total, what is the expected return in EPF? You'll have to have this conservative.
Okay.
7%. Like, give me some return.
Yes, I think 7 to 8%.
7 to 8%. Let's say 7%. Okay, 7% return. Right now you have 21 lakhs, right?
Yes.
And then what will be the contribution? Now again, so there will be one problem here. And problem means
if you step up method amount, I can decide actually.
Yeah, you step up method will be an average increment of your salary. Can that be considered? Monthly per year?
Yes, 10%.
10% is your average. Okay.
Yes.
So now I'll tell you what will be the problem. Now annual, it is annual, right? Annual. So right now yours plus your employers, yes. How much it is going?
Right now, I think 12 or 13.
Okay, so you can do a rough calculation. Okay. So roughly you can do that calculation. Okay. Are you getting it?
No, sir, not in annual PMT. Annual PMT, sir, in monthly.
Oh, sorry. It will be monthly, right?
Yes.
Yeah.
Yes.
Okay.
Okay.
This is after 14 years. Of course, it will, for you, it will be different. Whatever. This is not yours, right? This is somebody else.
I have only 13 years left.
30 years. Okay.
Almost, yes.
Okay. So now one thing is that 13,000 is being considered your part of your enhanced salary. Okay.
Okay.
So now what will happen? Whatever is your income, because EPF, otherwise what we are considering here, total enhanced salary, right?
Yes. Sir.
Total enhanced.
In hand, actually, it is excluding my EPF.
EPF. Now you'll have to include that EPF. Otherwise, you'll get wrong. Okay.
Okay.
So whatever is our 75,000, and then EPF we have already considered 13,000, right? So you'll have to include it because it is not going from your hand, right? So you'll have to do is equal to say 75,000 plus plus 14,000. Oops, what happened?
Sir, I just want to confirm right
Yeah.
now, whatever amount is there in my salary slip in hand amount, that I have to put here at the place of 88,000, and plus again I have to add with that 13,000.
Yeah, because normally what happened, EPF we consider that this is coming to you as a lump sum, right?
Okay.
Because in hand salary. Now otherwise it will be deducted, na?
Okay.
Are you getting it? If you take suppose now 88,000, out of that 13,000 from your salary we have considered, right? So now it is becoming, okay, 88,000 minus 13,000 is equal to actual 75,000 in your hand. So that is the right, because this is already we have considered. That's why such kind of calculations, or otherwise what you can do. So you have done this, right? You are going to get around 1.21 crore 20 lakhs, right? Mota moti. Okay.
Okay.
That much. So you can do one thing. You can just omit this, okay? And you can do one thing. You can make it 75,000 only. You have done this calculation there, because this is also a calculator. You can calculate here also, right? Yes. So now you know. So now you keep it 75,000, and then keep it 75,000. You have done this calculation here. So here EPF, and then lump sum you put 1 crore 20 lakhs. This is much more safer. Okay. You do this calculation separately, and then after put that money. That okay, from EPF I am going to get 1 crore 20 lakhs.
Okay.
Understood?
Okay.
For you, it will be 2030. Okay, let me do this. Oh, okay. So it will be somewhere around, if 1 year less, okay, it will be somewhere around that much only.
Yes.
1 year less, doesn't matter.
Yes.
Okay.
Okay.
Got it. So you could make that all the calculations balance completely.
No, sir. I stuck at this point. Now I think I am gradually sinking in those ideas. So definitely I'll do that. And if any problem arises, I'll get back to you on next Wednesday.
100%. Okay. Please do that. Don't worry. You'll be able to do it. Most of the 13 years. 13 years means you have 13 years till retirement, right?
Yes.
Yeah, that's okay. You are lucky, you didn't delay it much. Okay. Yes. So after 50, it becomes more and more difficult. Okay. Before 50, so you can really manage. After 50, it becomes so difficult. Actually, so difficult means no. Still, last. I think last Wednesday to last Wednesday we got somebody who was 55 years old.
Yes.
And he joined this. I don't know whether you were there or not. So he joined this. I cannot remember his name right now. He joined this and I said, I'm 55 years old. So he had doubts. But when he did that calculation, he found he can immediately actually resign.
Okay.
So, yeah. Okay. Okay. Any other question you have?
No, sir. Right now.
Okay. Beautiful. Awesome. Okay. So after that, Praveen KN. Okay. So many questions. Praveen KN. Are you there, Mr. Praveen KN? Praveen KN. Praveen KN. Okay, Anburaj is saying 8.65%. Anburaj is saying 8.65% for EPF. Anburaj, 8.65% is APS. It's very high. Yeah? So is it possible they'll be able to give 8.65%? Yeah, Praveen, can you raise hand such that your name comes, or it's now 8.1%. But still 8.1% consistently, yeah, it's good. Huh? So I don't know, where they are investing. Yeah, Praveen KN, yes, I can see you. Yeah, can you unmute? Yes.
Yes.
Can you switch on your video, sir?
Yes.
Okay, just a moment, sir. I'm taking you in. Yes, sir. Let me go through your question. Oh, it's tough. Oh my God, your question is very big, right? Like, I am new in this field. Hello, sir. I am new in this field. No previous knowledge about this. That is good. When you come with no previous knowledge, that's very good, in fact. I got a fund on first account which is split into 4 parts and invested mutual fund through ICICI Bank. They had put 4 different plans of hybrid category. Out of 4, 2 are giving good returns, also having an alpha value of 4. Other 2 are not that good, alpha value of 1, and return is just 1/4 of the performing ones. Okay. Last week when I attended Q&A session, you were suggesting to one of the attendee to put in large mid-cap funds. Can I change those non-performings to large mid-cap category since I am new in this? Is the challenge changing can be done by ourselves, or is that has to be done through the bank representative? Also, is there any change for charge for switching over one plan to another? Okay, beautiful questions. Okay, now this is a very this thing for all those who are new. First thing is that now you understand how to choose right mutual fund. Am I right?
Yes, yes.
Okay, you know right now how. Okay, so that means that portion is over. Okay,
Yes.
so now, and you have already said like you know which funds are good, which funds are not good. Okay,
Yes.
so all are 5-star funds that you have chosen already, at least selected.
Yes.
Okay, so are you choosing some mid cap funds also?
One is large mid cap. That is ICICI.
Okay, large mid cap. Okay, large to mid. Okay, that's fine. But mid cap is slightly risky right now.
Okay.
That's
But that
very
is combo of large and mid.
Combination of large and mid cap is okay. Large cap is better, but if you are going for large to mid cap, then that is slightly riskier because I think I have assumed you understand P ratio and all, right?
Yes.
Market is okay, fine. So now you see there are 2 things. First thing is that some funds they take exit load, they charge exit load.
Yeah.
Okay, if you are withdrawing it within 365 days. Okay, so normally some 1% or something they charge normally.
Okay. So there.
Hello, guys. Are you guys there? Hello. Can you hear me, guys? Okay, I'm so sorry. Like my system shut down. So I don't know actually what happened, why it shut down. Some problem with the battery, I believe. Okay. Okay, let's pray God that nothing happens this time. Okay. Yeah. Yeah. Udainizar. So something happened in my what happened suddenly. I am using MacBook. Suddenly my battery goes to 0. That's what happened actually. It suddenly went to 0. I don't know why. I don't know, this is a battery problem or the charger problem. Plug adapter, okay. So that is there. That's adapter always remains plugged. Adapter always remains plugged. Like whenever I am taking session, it always remains plugged. There is some practical orange light. Yeah, orange light showing. Orange light is on, and then the battery is also showing, but suddenly it went to 1% and then 0. It's gone. That's what happens suddenly. Suppose it is in 50% or 70% or 80%, whatever. Suddenly in 2-3 steps, it becomes 0 and then it's gone. That's what happens. I don't know why. So probably I'll have to change my machine, or I changed. I'll check it. What is the problem? Anyway, we are going ahead. Okay, we are going ahead. Saptarshi, are you there? Saptarshi, we are discussing Saptarshi's problem. Saptarshi, are you there? Saptarshi. Saptarshi. Saptarshi, he is not there. I'm so sorry. Saptarshi, you are not there. No, sir. Praveen was in call. Praveen, yeah. Praveen was in call. Yeah. Okay, so sorry. Praveen was in call. Okay. Yeah. I'm sure, right? Praveen or Saptarshi? Praveen came. Yeah, Saptarshi we discussed earlier. Okay. So sorry. Okay. Yeah, Saptarshi asked 2 questions, right? Okay, fine. Okay. Okay. Can you unmute? Praveen, can you unmute?
Yes, sir.
Okay, I'm just taking you in once again.
Yeah.
Can you switch on your video once again?
Yes. Very done.
Okay. Just a moment. Yeah, so your question was, good returns also have an alpha value for others. Okay. Large cap. Okay, what are the costs? So that's what we're discussing. Okay, now I can remember. Okay, because since it was not working, so it disturbs my brain like anything. Okay, so what is the cost? Okay, so there are one cost we have already discussed. There can be a. Switch it on. Just a moment. Yeah. So you might get some noise from AC. Okay, anyway. So this first was that what I said, first one is your which one? First one is your because of if you redeem within 1 year, some funds they charge exit loan. Okay, so you'll come to know if you do the research, if you go through it. In fact, value research itself, you will come to know somewhere they have mentioned it. Okay, that there will be a charge. This is one charge. Second charge is capital gain or loss. Okay, suppose now you see, always remember this thing. You'll have to pay capital gain tax or short-term tax, right? Capital gain tax means after more than 1 year, you'll have to pay tax at 10%. And if it is less than 1 year, you'll have to, whatever is the profit, that profit will be considered as your income and it will be deducted. Okay, the tax will be deducted. Now, capital gain tax happens only, or any taxation, in investment taxation happens only when you switch or book profit or loss, whatever. Only when you redeem. Okay, so if you do not redeem, they will not charge you any taxes. Whenever you redeem, then only they will charge the taxes. Okay, so these two aspects you have to calculate. First thing is that those who are less than 1 year, they may charge you some exit load. That is there. And second is, as I have said, a tax you'll have to look at. What is the tax due?
Okay, suppose if they're charging 1% of as exit load, so how that calculation is done actually? So 1% means 1% of that profit or not?
1% of the NAV.
NAV. Okay.
So this is like, this is a big amount. Sometimes when the profit is less, okay, whatever is the NAV, based on that they will charge 1%.
NAV means the total NAV or only that NAV whatever you have gained that part?
No, total NAV.
Total NAV.
From the total NAV.
Okay.
Total NAV means like, suppose today's value is whatever is the total amount, out of that 1% they will deduct.
Okay.
If it is only this, if you are doing SIP, only those SIPs, only those installments where they are less than 1 year there.
Okay.
More than 1 year, normally means, normally 365 is the exit load, and not like, for example, I can remember, not very sure, I think the Quant Focus Direct Fund that we have discussed, I think they do not charge any exit load. Okay. But Canada Robeco, I think they charge exit load. Okay.
Well, I have checked all these four are of 1% exit charges.
So they charge,
less than 365 days.
So yeah, that's what. So that these two costs you will have to incur.
Okay.
Okay. So now how to check? The checking is how to check it. Suppose always do it stress test. Stress test means, suppose from here market goes down to so we know we have a first quartile, median is 20, right? We have a upper quartile, we have a lower quartile. Okay, lower quartile is somewhere 16 or something, right? 15 or 16, cannot remember exactly. Upper quartile is 25, 26, something. Okay. So now if it goes down to 16, how much you are going to lose? It can go, right? So there is a probability, because a 50-50 chance. Okay. So if it goes down to 16, what is the percentage you are going to lose? Okay. So now if that is more than the exit load plus taxes that you are paying, so then then it is worth it. And if it's not that much, then it's not worth it. So that's how you'll have to take a decision.
Because presently those two funds are of like this one hybrid category, and the return also is less compared to the other one. So I've calculated that as you said right now, I just calculated that. So it's coming around 6,000 rupees somewhat. It's coming around. Okay. So we said
profit. This is the profit.
No, 6,000 rupees will be the exit load charges. What you said that.
Okay, exit load. Okay.
6,000 it's coming now as per the calculation what you explained to me right now. So in that case, and as you said earlier, right time to switch over to large cap. So is it advisable to switch it with this 6,000 bucks charges or?
Now you see, let me tell you one thing. Now you are in a hybrid fund, right? Yes, so now the biggest disadvantage of hybrid fund is you cannot play with the strategy that we have adopted. Okay. And you say this is a unique strategy. So somebody can, it's not, it's out of my experience, I have created this strategy. And how, like, same way, because I used to, a lot of people come and ask me, okay, what is the strategy? Okay. So I formulated a very simple strategy, which everyone can understand and everyone can follow. Okay. So this is a strategy. Okay. So now when this strategy you are following, then our strategy, if you are following, then, this hybrid fund will be a bottleneck. Because what will you do, right? You do not know, right? It's a mix. There are some debt also. So you cannot execute our strategy. So if you want to execute the strategy, you will have to be a pure either equity or debt, mid cap, large cap, pure. Okay, then only you can adopt this strategy. Okay. It doesn't mean that other strategies are not good. Other strategies can be good. A much better strategy there can be There can be a better strategy. Okay.
Yeah.
But for my experience at this level, means without doing that company analysis and all, without going to that the way analysts go, this is the best strategy.
Okay.
Easiest and best strategy.
So I'll go for an exit with the 6,000 bucks and opt for a different one.
I think it's better.
Yeah.
Anyway, you'll have to incur someday, right?
Yes.
Okay. And when it will be higher, your NAV, your this thing will be higher.
Yeah.
Okay. And of course, you then if it goes up, your NAV will be higher. You'll have to pay more. But of course, at that point of time, risk will be also more. Okay. So now risk is not that much. It's a 50-50 chance. It may go up. 50% chance it may go up. 50% chance it may go down. Okay. Upper quartile means, okay, let me tell you, in this, since you have asked this, and it came to my mind. Upper quartile means there is a 75% chance of coming down.
Okay.
Only 25% chance going up. Okay. So we ignore that.
Yeah.
Okay. Similarly, when it's a lower quartile means some 16 or something, 15, 16, right? So, or 15, 16. So that means there is a 75% chance that it will go up.
Okay.
Only 25% chances that going down. Okay. So it is not possible consistently catching those 25% upside and downside is not possible. Okay. So it's very difficult, extremely difficult. Okay.
Yeah.
Understood?
Yes. So same thing apply for the SIP also.
Same thing apply for the SIP.
Yeah.
Okay. So we'll have to change it simply.
Okay.
Clear, like done.
Yes, and second part of the question that is I am new to this one is can a person have multiple demat account? Is it because right now this was done through ICICI Prudential, ICICI account?
Yeah, you can have. So normally, what happens if you have 2 or 3 apps, everybody will open one demat account because that is their income nowadays. Yeah, you can have.
Okay. But this SIP also, for example, if I started right now and after 7 months or 9 months when it reaches the peaks place, so that time is it advisable to stop at that particular point or switch out to a depth one?
You'll have to stop. Otherwise, everything will go down, right?
Okay.
So knowingly, why to commit suicide? Right. Understood. Unknowingly something happened, that's good. When now you are earlier, I don't know how come it has come down. So now you cannot say that, right? So now you have knowledge. Okay. You are responsible.
Right.
Understood.
All right.
Okay.
Thank you so much.
Okay. So you made your plan. Did you make your plan and all?
Yes, sir.
You made it. So you reached that balance ho gaya means or there is some deficits.
Balance almost done. So only that for the kids' education. So that's what I was working through that SIP calculations.
Okay.
So there I had some doubt. That's why I asked you. So the SIP, if it is reaching on the top, that time I have to stop it and plan something.
Don't worry. Even if those people who are thinking because of whatever reason, if you're if you are not getting that, if slightly deficit is still there overall, okay. This knowledge that you have got how to switch, right? Yes. So that knowledge will ultimately over a period of time, that knowledge will create you so much of a return. Almost all of you, you'll be able to achieve financial freedom. Okay. So don't worry. I know some of you have already achieved it. So it's all your financial plans are properly managed, properly targeted, right? So some of you may not have, but with this knowledge, that's why I'm giving this, how to choose that portfolio, right? So with this knowledge, you will get more return eventually, and that will help you to achieve financial freedom. Let's complete your plan, okay? And I'm pretty sure for a lot of you guys, there will be a lot of surpluses. In fact, even after meeting the plan, there will be a lot of surpluses for fun. Okay.
I think I should have started it long back. I never knew about you.
Yeah, that's true. Okay. Yeah, that's what everybody says that. Okay, this is that's what people
Thank you so much. Okay.
Bye. Okay, then after that Koteswara Rao, Pasula Koteswara Rao, Pasula Koteswara Rao, are you there? Pasula Koteswara Rao, Pasula Koteswara Rao. Pasula Koteswara Rao is not there. Still Pasula Koteswara Rao is not there. Okay, then after that, okay. Kiran, Mr. Kiran, are you there? Mr. Kiran. Kiran, Mr. Kiran, are you there? Kiran, Kiran, are you there? Kiran, are you there? Kiran is not there. So Kiran has also asked like a similar kind of question. Saptarshi asked, I believe. Where to put NPS? He is asking like where to put NPS. Like as I have told you, it is always better where all this money that you are okay. Kothi Anita. Okay, you are. Can you raise your hand, Kothi Anita? So you asked this question. NPS, Kothi Anita. Did you ask this question? Okay. Okay, just a moment. So you will have to just a moment. How to? No, there is a. Can you see that there is a button here? You explain mainly like employees' lifestyle, monthly fixed income, but about business people, flexible income like me. I am also like you, right? Can you explain? Many people are waiting likely about lump sum investment. I am here also, but become your client. I am also become your client. Okay, just can you just raise this thing, Kothi Anita? Can you raise your? There's a reaction button. Can you see the reaction button? Reaction button, and then okay, just a moment. Let me see. Okay, if I can. Yeah, I can see you here. Can you unmute? Can you unmute?
Yes, sir.
Okay. Hi. Why I don't? Okay, so can you switch on your video? Possible?
It actually,
We
sir.
can discuss. Yes. Can you switch on your video? I don't see you here.
Sir?
Yeah,
Are you audible, sir?
Yeah, I can hear you, but I cannot see you.
I don't know, sir.
Okay. Now I can see you. Yeah, just a moment. Okay, so you are.
Sir, good evening, sir.
Okay, good evening. So Kothi Anita is who? Who is like your daughter or
myself?
Okay, yes, okay. Okay, because you. Okay, but you like Koteswara Rao, right?
Sir, I don't know English fluently, but I'm talking Hindi.
No issue. Whatever way you are.
Earlier, I am asking you, sir, before joining.
Okay.
Talking Hindi only.
Okay, so now you
I
can
understand
ask.
English and Hindi also, but I link to you in Hindi only.
Okay.
I'm asking to you.
Okay, so whatever language you are comfortable.
Actually, I'm from Andhra Telugu, but
Yeah.
I understand in Hindi and English also, but talking to you in Hindi only.
Okay. ठीक है तो मैं हिंदी में बताऊंगा तो आपका समझ में आएगा ना?
Okay, sir.
हाँ, तो मेरा हिंदी भी ऐसा है, मेरा मुंबई का हिंदी है।
परवाह नहीं चलेगा।
ठीक है, तो आप क्या पूछ रहे थे कि excess and minus about the employee only. Okay, for business people, right?
Yes, sir.
हाँ, तो मैं भी एक बिजनेसमैन हूँ, ठीक है ना? तो हम लोगों का एक प्रॉब्लम क्या होता है, हम लोगों का कैश फ्लो यूनिफॉर्म नहीं होता है, राइट? तो इसमें आप एक तो आपका कैश फ्लो बहुत ही ज्यादा फ्लक्चुएशन है, तो आप 6 मंथली कर सकते हैं, ईयरली कर सकते हैं, ठीक है? जैसे हम लोग का बेटर ईयरली कर सकते हैं, ठीक है, कि मैंने 1 साल में मेरे को इतना करना ही है ये पर्पस के लिए, ठीक है, ये स्मॉल के एक में, और आपका थोड़ा सा स्टेबल जैसा है, ठीक है, तो इसमें आप मंथली कर सकते हैं। अभी मैं कैसा करता हूं, मेरा भी आप जैसा ही है, ठीक है, कोई ठिकाना नहीं रहता है, कभी कभी लॉस हो जाता है, कभी कभी प्रॉफिट होता है। सो मेरा क्या है ना, मेरा हर महीना इसके लिए हर महीना मेरे को इतना रखना ही है, ठीक है। तो वो तो मेरा हर महीना वो चलता ही है, जो भी है जैसे भी है। जरूरत पड़ेगा तो मेरा पहले से पिछली मंथ से लेके आके मैं डालूंगा, राइट। और अदरवाइज किसी से पैसा लेके भी मैं डालूंगा, ठीक है। ये तो हो गया। बाकी पैसा जो है मैं लिक्विड फंड में रख देता हूँ, फिक्स डिपॉजिट में रखता हूँ, डिपेंडिंग ऑन द सिचुएशन।
आपका डिस्टरबेंस कर रहा हूँ आपको।
हाँ
आपका
बताइए।
वीडियो से पहले हम क्या एफडी में लगाया पूरा अमाउंट, जो भी लमसम है।
हाँ
इसमें 6%, 10 लाख का
हाँ
बाद जो IDFC बैंक जो भी है ना,
हाँ
इसमें 10 लाख तक 4% देगा। इसका बाद जो भी अमाउंट है तब तक 6% देगा।
हाँ।
तो अभी इसमें रखने का इरादा नहीं है, आपका
नहीं
सजेशन का वजह
रखने
से
का,
मैं
नहीं रखने का, क्योंकि वहां तो फायदा नहीं है ना, वहां तो फिर वहां तो वो
तो
टैक्स भी लगता है ना।
हम गलती ये भी कर दिया कि 40 लाख का, फिर जो भी अमाउंट है इससे ज्यादा हम लेके फिर बाद में मतलब होम लोन नहीं मिलता बल्कि टॉप अप लोन भी लिया है। वो गलती कर दिया अलग। दूसरा ये अमाउंट वो अमाउंट दोनों दोनों मिला के जगह लेने का इरादा है, अभी छोड़ दिया। घर
हाँ
का जरूरत नहीं, जो घर है फिर घर लेने का तो मतलब नहीं है ना।
मतलब
जो
नहीं
आपका
है, ये
लेसन सुन लिया
बिल्कुल
इसका
ऐसा
बाद वेस्ट। इसलिए हमने म्यूचुअल
है।
फंड में।
ठीक है, आपको तो एक्चुअली ये मालूम हो गया कि तो ये गलती हो गया, ठीक है।
सही।
और लोगों का तो वो भी मालूम भी नहीं होता है, ठीक है। अभी बोलने के बाद भी मालूम नहीं होता है, ठीक है, मतलब
सही।
अरे क्या बोल रहा है, right? तो ये जो हो गया। अभी अभी से जैसे आपको मालूम है ना कैसे म्यूचुअल फंड चूज करना है, वो मालूम हो गया ना, ये
हो गया
मालूम
थी,
हो गया।
फिर आप पर्सनल कुछ पर्सन वर्कशॉप में बोल देने की, वैसे भी
हाँ
ट्राई कोशिश करेंगे।
हाँ, 5 स्टार कैसे चूज
डायरेक्ट।
करना है, कैसे
जी
डायरेक्ट म्यूचुअल फंड्स करना है, ठीक है।
जी।
वहां से मालूम हो गया। तो इसमें आप ऐसा करिए, आप ये रखिए लिक्विड फंड में रखिए। सपोज जो भी आपका, अभी मेरा बिजनेस है, मेरा बिजनेस में थोड़ा सा ऐसे लिक्विड फंड में रहता है, ठीक है। और फिक्स डिपॉजिट में भी रहता है, ऐसा नहीं है, फिक्स डिपॉजिट में मेरा रहता है। वो कैसा फिक्स डिपॉजिट है मेरा वाला, स्विच
बस
क्या है, स्विच इन।
6 मंथ्स के लिए टर्म
नहीं नहीं,
या
ऐसा नहीं।
इमरजेंसी फंड।
नहीं ये तो है ही, वो अलग है। इसके अलावा आप बिजनेस में ना एक स्वीप इन स्वीप आउट, आपका एक ये आता है, स्वीप इन स्वीप आउट, ठीक है। तो स्वीप इन स्वीप आउट मेनली एसबीआई का अच्छा है, और आईडीबीआई बैंक का अच्छा है। एचडीएफसी का भी अच्छा नहीं है, ठीक है। उन लोगों ने बहुत, पता नहीं उन लोगों का क्या इरादा है, लेकिन वो लोग फाइन डालता है, क्या डालता है, कुछ डालता है, ठीक है। मेरा एक्सपीरियंस अच्छा नहीं रहा, क्योंकि एचडीएफसी बैंक मेरा मेन बैंक है, ठीक है। मगर आईडीबीआई बैंक में वो लोग बहुत अच्छे हैं। आईडीबीआई बैंक में मेरा जो है, आई थिंक 5,000 का ऊपर मैंने वहां डाला पैसा, सेविंग्स बैंक है, सेविंग्स अकाउंट में डाला 5,000 का ऊपर जितना पैसा है वो अपने आप लेके जाता है।
सही।
और सिर्फ फिक्स
HDFC में मेरे
डिपॉजिट में
को फाइन डालता है कभी कभी,
हाँ
राउंड
कभी
फिगर डालने के लिए। थोड़ा भैया कमेंट होगा कम होगा, जब भी 350 रुपीज की फाइन डाल देते हैं पर।
एचडीएफसी बैंक, मेरा जो एक्सपीरियंस है एचडीएफसी बैंक वो
सही
सबके
बात।
लिए ठीक नहीं है, लेकिन वो फाइन
सही।
डाल देते हैं, जैसे मैंने बोला ना। अभी
अच्छा।
आईडीबीआई में है और मेरा वाइफ का एसबीआई में है। वहाँ उन लोगों का भी कैसा है, सेम है, पैसा उन लोगों का जाता है और फिर ऑटोमेटिकली फिक्स डिपॉजिट हो जाता है, ठीक है। अभी आपका डेफिसिट हो गया बिजनेस में, आप उधरा कर लीजिए, आपका सपोज 5,000 रहेगा ना, उधरा कर लीजिए। वो लोग क्या करेगा, वो जो फिक्स डिपॉजिट है वहां से ब्रेक करके आपको पैसा दे देगा, ठीक है। तो आपका पैसा आइडल नहीं बैठेगा, ठीक है। तो ये हो गया। तो आपका जो मंथली डालना है आप मंथली डाल लीजिए। सपोज है ना एजुकेशन के लिए आपको मंथली डालना ही है, ठीक है, से।
सही।
तो
हाँ।
ये डाला। और बाकी से रिटायरमेंट प्लान के लिए और कुछ के लिए और वट एवर, ठीक है। एक गोल के लिए मंथली डालना पॉसिबल नहीं है, कि फ्लक्चुएशन है। आपका ईयरली टारगेट कीजिए कि मेरे एक साल में इतना तो मैं डालूंगा ही डालूंगा, ठीक
सही।
है। ऐसे आप चलिए, दोनों मिक्स करके चलिए। समझ में आ गया? तो आपको मिल जाएगा, हो जाएगा। हाँ, मगर ये हमेशा है, हम लोग बिजनेसमैन है, हम लोग का रिस्क हमेशा रहता है, राइट।
कभी ज्यादा आता है,
तो
कभी नुकसान होता है,
हाँ, तो
कभी कम आता
वो
है।
तो होएगा ही। तो हम लोगों ने चूज किया है ये, ठीक है। आपने नौकरी किया था पहले और नहीं किया था?
नहीं जी, कॉन्ट्रैक्ट करा है।
अच्छा
जैसा
अच्छा,
40
हाँ।
40 तक कॉन्ट्रैक्ट करा है, 40 का बाद अभी भी बिजनेस करता है। वो
अच्छा
PG हॉस्टल्स मेंटेन करता है।
अच्छा अच्छा,
कभी
हाँ।
कोरोना का वजह से फिर नुकसान हो गया, फिर अभी स्टार्ट हो गया, अभी PG
वो
हॉस्टल्स मेंटेन करता
अच्छा अच्छा, ये मीन्स
पर
कैसे
सबके
कैसे?
लिए भी आप बोल सकते हो, कोई इंग्लिश अंग्रेजी समझ जाता है,
हम्म,
बात करने में इतना फ्लुएंट नहीं आता है, समझ
नहीं नहीं,
जाता है।
ठीक है
तो
ठीक है, अभी
अगर
तो
होना,
समझ में आ गया ना,
नहीं
तो
नहीं,
समझ में आना
आप
चाहिए।
परसों आप वर्कशॉप में पर्सनल 1 to 1 अलग आप कुछ ट्रेनिंग करने के लिए जो फीस होना तो दे देता हूँ, मगर अभी इन्वेस्ट करने का थोड़ा ज्यादा अमाउंट इन्वेस्ट करने का इरादा है,
अच्छा
ऐसा कुछ। तो
अच्छा।
अभी हमारा
हम्म,
जो इमोबल प्रॉपर्टी सब बता देता है, देगा
अच्छा
आपको, फिर बाद में आप कुछ रहे तो हम फीस पे कर सकते हैं।
अच्छा, तो मैं एक, आप एक काम करिए ना, क्योंकि मैं भूल जाऊंगा, ठीक है? आप पूनम को एक मैसेज डाल के रखिए। अब ये बताइए कि मैं ये उत्पल के साथ मैंने बात किया है, ऐसा करके एक मैसेज डाल दीजिए, ठीक है? मेरा स्केड्यूल मेरा बिजी है, राइट? तो मैं वहां से मैं टाइम निकाल के मैं देखता हूँ, मेरा स्केड्यूल देखता हूँ, ठीक है? अभी तो इस हफ्ते तो संडे तक मेरा पूरा बिजी है, ठीक है? तो नेक्स्ट वीक में मैं देखता हूँ किधर मेरा है, तो मैं कुछ करूंगा डेफिनेटली। ठीक है, आप कब ज्वाइन किया था? व्हेन डिड यू ज्वाइन?
मैं प्रीवियस संडे, लास्ट संडे या प्रीवियस संडे,
बस प्रीवियस संडे ज्वाइन किया था, तो ठीक है।
आपका पूरा जितना भी समझ में आया उतना 2-3 बार पढ़ लिया है। तो
डोंट
ज्यादातर
वरी।
तो एम्प्लॉयज के लिए एकदम अच्छा है आपको, मगर
हाँ
आपको मालूम है ना, बिजनेस का ऐसा कुछ रहता
हाँ
है, लमसम
हाँ
रहता है,
हाँ
फिर कोई इन्वेस्टमेंट अलग अलग रहता है।
हाँ, सही बात है।
बच्चों के इन्वेस्टमेंट स्टार्ट करने के बोल दिया, हमारा तो बच्चे
हाँ,
पढ़ने का आ गया ना टाइम, फिर
सही बात
इसमें
है,
प्लानिंग करने
कैसे
की।
करना है, सही बात है। इधर मेरा
कुछ
क्लाइंट भी
टिपिकल
है
है ना,
जिस, हाँ।
टिपिकल है ना, इसलिए आपको
नहीं,
सबसे
सही बात
अपने
है,
से भी अलग आपको
सही बात है,
देंगे।
सही बात है, सही बात है। मैं देखता हूँ, ठीक है, मैं देखता हूँ। अब कुछ फीस लगेगा, क्योंकि नहीं तो सब लोग आ जाएगा यहाँ,
चलिए,
कितने जितने सारे
परवाह नहीं,
लेंगे।
परवाह नो
21,
प्रॉब्लम।
ठीक है।
आपके लिए नहीं, हमारे लिए दे रहे हैं ना, ये
हाँ
इससे फायदा भी होगा ना अभी।
हाँ,
आपको जो
डेफिनेटली।
भी फीस दिया, इतना नॉलेज आ गया, परवाह नहीं।
ठीक है
जो
ठीक है।
सब लोग क्या पैसा लेते हैं, धोखा देता है, आप तो धोखा नहीं दिया। पहली मैं पूछा, आपको
हाँ
याद है कि नहीं, हमने तेलुगु आंध्र प्रदेश से बात कर रहा हूँ, विजयवाड़ा पक्का तेलुगु,
हाँ,
हम
अभी
समझ
याद आ
जाते हैं
रहा
दो
है।
लैंग्वेज। तो फिर लमसम भी करने का है, परवाह नहीं। एक टिप आपको समझ में आ गया तो भी आपको सेव होगा, आपको ऐसा मैसेज दे दिया मुझे, वही वो सोच के
थैंक
हमें
यू,
आपके पास फीस फॉरन दे दी है। तो
थैंक यू,
आप बोला
थैंक
कि
यू।
उस दिन
हाँ
इसमें इतना आइटम है, कोई भी एक आपको काम में आ गया तो भी आपको इतना फायदा मिल जाएगा, आपको बोल के आप हमारा भरोसा दे दिया। अभी इतना नॉलेज हमने इसमें
ले
मतलब
लिया ना, तो फायदा तो हुआ
ये
ना।
हो गया, इसलिए इसलिए
ऐसा
अभी भी
लेना, हाँ,
और कुछ
और लेना है।
लेने के लिए
ठीक
तो
है ठीक है।
इतना जने में आपको भी नहीं होगा ना, पर्सनली।
ठीक है ठीक है ठीक है ठीक
जो
है,
भी
मैं
फीस है
कोशिश
हम
करूंगा।
देगा, नो प्रॉब्लम।
ठीक है ठीक है, मैं देखता हूँ, ठीक है। देखिए, मैं
शुक्रिया, बहुत
डेफिनेटली लाइक ना, आई विल हेल्प यू आउट, ठीक है?
बहुत बहुत
जैसे भी
शुक्रिया।
है, ठीक है, डोंट वरी।
मैं मैसेज डालूंगा,
हाँ,
पूनम से
मैसेज आप
अच्छा
पूनम को डाल के रखिए, क्योंकि
ठीक।
मेरा पास ये भी एक डिसएडवांटेज है, हम लोगों का कुछ ये टेक्नोलॉजी टेक्निकल कुछ है, वो मैसेज में दिखता है, मेरा पास आता ही नहीं है, लाइक यू नो, मैं देखता ही नहीं हूँ, लाइक यू नो, ऐसा है। बार बार मैंने, हम लोगों ने कोशिश किया था, बोला भी है कि वो व्हाट्सएप का वो जो हम लोग का सिस्टम में था ना, वो सिस्टम ड्रिवन है, ठीक है, कंप्यूटर्स में चलता है। तो
जी
मेरा कंप्यूटर्स में वो लोड ही नहीं होता है, ये पता नहीं क्यों, ठीक है। तो एनीवे, तो बट सिविल सिविल मैसेज में, सिविल
ओके।
मैसेज में, ठीक है। ओके।
आप जो भी बोला है अभी बैलेंस कर दिया हमने। जो
हाँ
तो इनकम से इन्वेस्टमेंट ज्यादा, मंथली खर्चा ज्यादा हो रहा है अभी, तो वो बैलेंस करने का नहीं हो रहा। हमारे समझ में नहीं आता, इतना बैलेंस नहीं हो के फिर भी फायदा कैसे मिल रहा है, मुझे समझ में नहीं। 12 लाख का चिल्लर, 12 12 लाख का चिल्लर साल में हो जाता है, फिर महीने को 1,10,000 का खर्चा हो रहा है, फिर भी फायदा कैसे मिल रहा है, तो किधर से पैसा आ रहा है, किधर से।
तो आपको तो
इससे
बिजनेस बिजनेस का कोर्स करना चाहिए तभी तो। वही बिजनेस फाइनेंस का कोर्स है ना।
हो सकता है मल्टीपल, थोड़ा छोटा मोटा मल्टीपल
अ,
बिजनेस में।
ठीक है ठीक है, एनीवे, तो मैं वो करूंगा, लेकिन इस संडे
मेन
मैसेज
क्या है,
को।
हम लोग वेस्ट 6 महीने से उनको इंटरेस्ट दे रहे हैं, तो असल इरादा क्या है, तो एक घर लेंगे बिजनेस के हिसाब से, कमर्शियल इंटरेस्ट, कमर्शियल रेंट ज्यादा हो रहे हैं,
जाना
तो
था।
हम लोग 1.5 लाख तक मंथली भाड़ा दे रहे हैं।
अच्छा,
तो कम से कम एक को अल्टा है तो भी 75,000 बच जाएगा। वो खरीदने का सोचने से क्या है, कम से कम 2 करोड़ रुपया हो रहा है। हमारे उम्र के हिसाब से देखने से क्या है, कितना दिन धंधा करेगी, उसके बाद हमारे को 2 लाख, 2 करोड़ रुपया, आपका हिसाब देखने से क्या, 2 करोड़ रुपया खर्च करने के बाद अपने को 1.5 लाख मिलेगा। आपका
एग्जैक्टली, हाँ।
कैलकुलेशन के हिसाब से कष्ट करने की जरूरत नहीं, वो 2 करोड़ इसमें लगाने से तो आसान से अपने को बच जाएगा ना।
हाँ सही बात है,
उम्र के
सही
हिसाब
बात
से
है,
देखना पड़ेगा।
सही बात है,
तो
सही बात
इसमें
है।
क्या फिर डॉक्यूमेंट का प्रॉब्लम भी रहता है।
हाँ,
रियल एस्टेट का मतलब ये भी रहेगा ना,
रियल
घर
एस्टेट
बनाने
में,
का।
हाँ अभी देखो मेरा जो एक्सपीरियंस है, मैंने बहुत सारा, क्योंकि मेरा ट्रांसफरेबल जॉब था पहले, ठीक है, बहुत सारा जगह में गया था, इधर उधर इधर उधर घूमता रहता हूँ। तो ये रियल एस्टेट में पर्टिकुलरली कमर्शियल में तो ठीक है, फिर भी मगर जिन लोगों ने ये रेसिडेंशियल में क्या है ना, तो इसमें रिटर्न कुछ भी नहीं मिलता है, आपका
सही
मेंटेनेंस
है, सही
प्लान
है।
सब कुछ लगे ना, अभी लोगों का कंटाल आ जाता है। अभी भी मेरा ऐसा बहुत सारा मेरा ये है,
तो
बिकॉज है
नुकसान
ना,
है।
हाँ नुकसान नुकसान होता है एक्चुअली। अभी
मेरे
लोगों
मेरे
को,
भी आप इससे पहले मिलने से बहुत,
हाँ
एक घर सिटी में घर लेने का, तो एक राइस मिल है हमारा जो
अच्छा,
पैडी करने के,
पड़ेगा, हाँ हाँ
वो बेच
मालूम है,
के
हाँ
फिर घर लिया।
हाँ।
30 लाख से घर लिया, इसमें फायदा क्या, 10 लाख आता है, 10,000 आता है।
तो
तो नुकसान क्या है, टॉयलेट बोर्ड लगा के करना पूरा चले गया। तो इसमें ये 30 लाख दूसरा जगह में लगाने से भी अच्छा
बहुत
फायदा
बहुत
मिलेगा।
मैं सही बात है, हमेशा सही
इसलिए
बात
रियल
है यार।
एस्टेट का उसको फिर टैक्स भरना पड़ेगा अलग से। तो ज्यादा
डेफिनेटली,
जरूरत रहना चाहिए, आपने किधर रहता मालूम नहीं, वो एक एक जगह में रहता बोल के वो खरीद
एग्जैक्टली,
लिया, फिर बना
हाँ
लिया, हाँ, हो गया। 4 साल इसमें है, पूरा अपना हिसाब से बना लिया। फिर उसमें फिर बच्चों को पढ़ने के लिए स्टेट सिटी में आ गया। फिर यहाँ एक घर लेके फिर अगले में, तो
नहीं नहीं,
अगले
वो
साल बेंगलोर गया तो
वेस्ट हो
वहां लेना,
जाता
ऐसा तो
है,
ठीक नहीं ना।
वेस्ट हो जाता है, दैट इज ट्रू।
इसलिए अब जब फंड को एक जगह में रखने से फाइनेंस बढ़ता
ठीक है,
बोल के।
डेफिनेटली डेफिनेटली डेफिनेटली, ओके, करेंगे, देखते हैं, ठीक है ना, क्या कर सकते हैं, ठीक है, चलो, ओके,
थैंक
थैंक यू
थैंक यू
थैंक यू
थैंक
थैंक
यू।
यू थैंक यू। Okay, just a moment now. Okay, just a moment now, one by one. अभी इसमें इसमें क्या हो रहा है यार, कंप्यूटर क्या बोल रहे हैं? Okay, after that, Praveen Ken, we have already discussed. Praveen Ken, we have discussed already. I'll take all your diaries. This time, what happened? Like, you know, there are a lot of questions somehow, but it's good. After a long time, I'm getting so much question. Okay. Okay, first name I'm getting 2.6% of mention number on post your session 2.4. Okay, who is there? Okay, somebody is saying I am getting 2.6%, sir. Mention session number and post your session 2.4. I am getting 2.6%. Name is not there. Since there is no name, I don't know who sent this. I am getting 2.6% in session 2.4. Who is there? Somebody? Sunil, okay, I'm coming to you, Sunil. So you said NPS scheme for, oh, no, 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 no. Sunil, I'm so sorry. For use of switch option, date equity as per Nifty P. Oh, okay, just a moment. No, Sunil, avoid capital gain. Okay, so these things I completely forgot. In fact, I got stuck up with something else. Something else means what happened after that? क्या हो रहा है? This computer is disturbing. Yeah, yeah. In fact, after that, somebody asked me about capital tax harvesting and all. So, eventually, I forgot the thing. I was taken over by tax harvesting. Okay. So I'll have a look at it. Can you just reframe? Give me the question again, Sunil. Can you just, because it has all completely gone out of my brain. Can you just do it? Can you just reframe the question again? Because I can remember this thing, it was something very interesting. That's what I can remember. But what was that exact question that you posed? I cannot remember. Yeah, please type this question. In the meantime, I am taking Uday Nizar Abdul Khader. Abdul Khader, are you there? Mr. Abdul Khader, are you there? He was there. I can remember. He said, I am a technician. I think. Abdul Khader, are you there? Abdul Khader, are you there? Abdul Khader, are you there? Yeah, you are there. Abdul Khader, Uday Nizar Abdul Khader. Which are main fundamentals that should consider while selecting mutual funds? Abdul Khader, can you raise your hand? Can you raise your hand? Have you raised your hand? Where are you? There? Okay, just a moment. Okay. Can you unmute?
Hello.
Yeah. Can you switch on your camera? Possible? Yes, sir. Just a moment. I can see. So
Yes, sir.
yes. So how it's going? Course.
Fine.
Fine. Okay. So how much? What percentage you have completed?
About module 2.
Okay, module 2. So you didn't attend the this thing workshop, right?
No.
No, you didn't attend the workshop. You see, you will get this answer. Now you have seen today, all these people, they know how to choose the mutual fund. Okay. Exactly. So you will also understand it. But for that, you will have to finish that course. Okay, because it's a long thing. Gradually, that's what you are learning. Okay, step by step. Ultimate aim is how to choose that right mutual fund for your purpose.
Okay.
Right? So don't worry. But you'll have to finish it. You have taken workshop you have taken?
No, not exactly.
Oh, so you didn't take the workshop. Then please finish that course. And let me give you a shortcut. Shortcut is you finish module 1, bonus 1, bonus. I cannot remember the numbers. Equity optimization bonus. This you finish. Second, you finish debt optimization. Okay, bonus. I cannot remember the exact name. I'm just giving you the topic. These two you finish. Then you finish. Mutual fund. Okay, these three. I'm giving a shortcut. These three you finish, and then after that you can straight away go to that last session.
Which one, sir?
Last session is where the practical. In between retirement planning. Okay, so I'm giving you one by one. I'm giving you. First is the equity optimization. Note it down. I'm giving a shortcut, but you'll have to go through everything. I'm just giving a shortcut so that quickly you can have an idea. First one, equity optimization. Second is debt optimization. These are two are bonus. Okay. Then retirement planning. Third. Okay. Then fourth is last one, practical financial planning. Okay. So if you go through them, then you will understand your question. but you'll have to go through everything, So I'm just giving a short term, like, if I say, no, I want to know this, okay? So this four. Okay,
I will try.
Yeah, please do. Please go through, then you'll understand. So you have seen today, right? Everybody is discussing so high level, right? I've taken this alpha and everything. Okay.
Okay,
done. Yeah, please do it. Okay. So because so when you do it, then only realize how important this is. I'm pretty sure you have seen all the people, so they are so they are so going forward, towards their goal and everything. Please do, please finish, yeah, slowly, please finish. Okay, chalo. Okay, then after that Yeah, now I think, we have, yeah, this was the last. This was the last. After that, Saptarshi, he did today. We have already discussed. Yeah. So now I am taking one by one directly. Okay. Okay, just a moment. Every NPS will also provide tax benefit of rupees 50,000 additionally, extend ATD up to 2 lakhs. Okay, just a moment. I am taking Sunil Kamar. I'll see it. Okay. So I'm so sorry. I forgot it. Forgot it means actually, there is a lot of activity happening in my end. I'm just copying it and pasting it. Okay. Let's see. Okay, let me copy this. Then after that, I will. I'm just copying everything. Okay. Including your link. Yeah, thank you, Sunil, so much. Thank you so much. Okay, everybody, all of you guys, you have joined. Just a moment. Let me save it. Let me save it. Everybody has joined Telegram group. Everybody has joined Telegram group. All these new joinees, have you joined Telegram group? If anybody is there who has not joined Telegram group, if ऐसा कोई है जो Telegram group अभी तक join नहीं किया है, please join Telegram group. Everybody, okay? Ask question. Sunil Kamath is there. He will answer you. Sunil, am I right? Sunil Kamath is there, so he will definitely answer your question, and you can rely on his answers. Whatever he answers, that's perfect. Okay, everybody. Okay, so now I am taking one by one. I am taking. Okay, just a moment. I am taking one by one. Nildas. Telegram link. You do one thing, Uday Nijar. You do one thing. You just in your WhatsApp group, just request for the Telegram link. Poonam will post you a Telegram link. Okay, and there is a lot of it's this all our students are there. I think 2,000 plus students. We have total 3,000 students. Out of that, around 2,000 students are there. This level students, 3F students. Okay. So those who are become almost those who joined earlier, so they have become almost expert, right? Most of them, right? So they are very active. So and also you will get a lot of new information. In fact, I do learn a lot from our Telegram group. In fact, let me tell you very frankly, right? And I was not very tax savvy, only after going through the readings and recommendations in the Telegram group. Now I have started using Coin. Okay, I am this telephone guy, because I started in 1997. Right now, my career. Okay? So those days, all these things were not there, apps, etc., etc. Okay, Mr. Nildas, can you unmute yourself? One more link for NPS. Okay, I'm just taking it. Okay, just a moment. Sanjeev Das, just a moment. Okay, I'm just telling you. You see, Sanjeev Das, if your question, your questions will be answered here. For that, you don't have to post your questions in any group. You post your questions in the group where it is being expected that all the students will discuss, and this is very it's a very helpful, right? Sometimes I see in Telegram group lot of good discussions happen. It's a very healthy, very powerful discussions, good discussions happens, right? Not necessarily everybody's points are it's not necessary. Sometimes there are wrong things, but it's okay. This is what discussion is, right? So please post your question in the Telegram group. There, it is being discussed by all the participants, right? And yeah, definitely there are a few guys there, including Sunil Kamath, who are they have really gained a lot of knowledge, experience, in this field. So these guys really give very strong points. Some of them are there, like they give very strong points. Okay, so always be in a Telegram group and post your question there. So here you can ask directly question. Like you can come here now. Nildas will be asking question same way. Like today we have seen it. That's how you can. That's how you can ask your question straight away here. So you don't have to post to ask question here. You just need to come here. That's it, and you raise hand. That's it. Okay. So you just need to come here and raise hand. That's it. Yeah, Nildas, can you unmute? Nildas, can you unmute? Nildas?
Yes, sir. Can you hear me?
Yeah, I can hear you. Can you switch on your this thing or no?
Already switch on, sir. But the same
Already
issue.
switch on?
You can't see me, I think. Already switch on, sir.
No, it is completely black. Okay, just a moment. Let me see. Add spotlight. I am adding spotlight. It's a black.
Yes.
Anyway,
yes.
no issue. Yeah, please go ahead. Yeah.
Yeah, sir. I have a very specific concern regarding the mutual fund selection. As we discussed earlier, even today also, I think at the initial stage, you mentioned some Canara Roboco blue chip and quant focused direct fund, I think. Right. Even I raised the same concern last time that this quant focused fund is not exactly the large cap.
Why is it?
Is not in the same category actually.
Okay, that's a beautiful this thing, right? Good, yeah.
So we can't actually directly compare the alpha between Canara Roboco or some else with this quant focused.
Okay.
As you can see, there's a huge alpha, right, sir?
Alpha is huge. Yeah, I know that. Yeah.
But sir, then at that time somebody mentioned, even you told it's a large cap, but I think further I analyzed and found it's not exactly the large cap. It's a focused fund, means it can the fund manager can invest in max to max 30 stocks, irrespective of the asset class. It may be large, mid, small, anything.
Okay.
I mean, I have to have the higher risk appetite. Otherwise, this is not exactly the large cap. I mean to say, it's a risk involved actually.
Okay. Just a moment. Okay, let us look at. Can you share your screen or I should share?
I can share one screen. I can share. I prepared something for my second question actually. Let me share my screen. I have prepared some graphical.
Now, this first thing is that just let us go through that value research online. Okay, let's see that one by one.
Yeah.
Okay, so let me do one thing. So you are sharing value research online?
No, sir. Yes, in value research is showing under large cap, but technically it's not large cap. The concern is that it's technically it's not large cap.
So you have seen their this thing? You have seen their.
I have seen in Ticket Tapper. I have seen in the ET Money. Different apps. They are. I mean, equity is the category, but the subcategory is focused.
No. Okay, just a moment. Okay, let me see. Let us understand your logic. Just a moment. Still Windows, they have changed this thing, I think. It was under large cap, right? Large cap or large mid cap? It was under large cap, right?
And I am saying it should be under focused fund. Focused is some other subcategory under equity fund, like large, mid.
Hey, focus means what is the benchmark? What is the benchmark?
The benchmark of focus. It will be 500 Nifty TRI. Just a minute. It should be 500 Nifty. The benchmark should be 500 Nifty 500 TRI.
500 TRI, but that is the large cap benchmark, right?
The large cap benchmark probably it can be Nifty 100 TRI, it can be S&P BSE, like Canara Robeco follow S&P BSE 100 TRI.
So that is large cap, right?
Large cap.
That is large cap. So they this is Canara Robeco. Just a moment. Okay. So they have the focus. This guy, just a moment. So this might happen. Okay, I'm not saying no, right? This might happen. That's why research is necessary. Quant focus direct, right? This one.
Yes, sir. Quant focus direct. Yes.
Okay. Okay. Let us see their portfolios. From here, we'll come to 97% equity.
Yes, sir.
It's
Yes, sir.
mid, yeah, see, giant is 50-60%, large is 29%, and mid is only 10.85%. So it is a this thing, it's a large cap. Until and unless they change it, okay, if they change it in between because of some category, right? So now you see this is their portfolio, right? So capitalization is large only, Puda. You see that? It's a large capitalization.
They can invest in max to max 30 stocks only. It's not like that they take the whole 100 large cap stock.
Yeah, that's fine. That's fine. Like there can be like a lot of subcategorization, right? So since we are focused on large cap only, so if any large cap that qualifies our requirement, we can go for that. You're getting it? Large cap, like sometimes I can say, okay, I am large cap, but I am focused only on, say, with cash position more than this $1 million. Okay, so this is my strategy, right? So, but I'll be in the large cap only. So I'll have to tell MP that my benchmark is large cap. Okay, so then I am a large cap. We're getting it. So these styles, sometimes they are very focused or very profound so far style is concerned, right? Like let me tell you, there is one fund manager, he used to work for Kotak. He was in the mid cap. So mid cap is his focus, but his strategy was quarterly cash positive, some like compared to okay, there are some complex things. Revenue to cash ratio should be this much plus. That was a strategy. Okay, and that was more a private fund. Private fund means they were like more. They used to go to the big guys, rich guys, and they used to sell the products. Okay, so I knew him. So this is okay, but his benchmark is that, like we used to say, what is your benchmark? Mid cap. He must perform much better than the mid cap. Okay, that's his challenge. If he can do it, so yeah, definitely. For each and every fund manager, they have a very well-defined strategy or loosely defined strategy. Doesn't matter. But so far, you see, they are all large cap, and they should not change it. They have once they have said that my benchmark is large cap, then they'll have to follow the benchmark, large cap benchmark. They cannot change it until unless they say I am a flexi cap or something, okay, or multi cap. Then they have like whatever is the relevant. Means it is being defined by the benchmark they follow, not the strategy. Strategy, yes, obviously they will have to have their own strategy.
But this fund manager has the luxury to choose the top 500 company as per market capitalization.
Yeah,
because their benchmark is 500 try.
Yeah, but it is not necessary, right? You see, no, otherwise everybody will perform same. Why people are performing differently? Because they have their strategy, right? No, you'll have to invest this 500 everybody. No, so I'll choose. But I have told my benchmark is Nifty. If I say, then I'll have to invest this 50 companies only. I can change the weight. Okay, I can change the weight to outperform Nifty, but I cannot go beyond. Similarly, here is a large cap, so I have those benchmark, right? So I'll say this is my benchmark, and whatever for that benchmark, whatever is the category. Okay, so I'll have to I can have any strategy. Otherwise, everybody will perform same way. Okay, so this is the difference. So you'll have to have fund manager have different categories. Based on that, they can give name. They may not give name. They can keep it secret. They can disclose it. That's up to them. Understood?
Okay, so that means that this fund manager can choose small cap as well. I mean,
no,
if you want.
No, because when they're saying we are our benchmark is large cap. Okay, so 60% should be in large cap only. Understood? 60%, yeah, I think 60%, right? Yeah, 60% should be large cap only. Next 40% they can do here and there. Now here you see they are 60% in giant, 29% in large, only 10% is mid. They cannot change it.
Sir, giant means what?
Giant means I think top 100 or top 50, something like that. So you can see this thing. I cannot remember these definitions. Top 50, yeah, stocks that form the top 50% of the total market capitalization. They are the giant. Top 50. Okay. Large is your next 20%. Stocks that form the next 20% of the market capitalization. They are this thing. Means apart from 50, the next 20% is the large. So it's like that. Okay, they have given specific categories. Then next 20% is mid. Then after that, next 20% is next 9% is the small, and bottom 1% is tiny. So total 100%. So it's like that. Okay. Understood? Clear?
Yes, sir. Sir, I have to share the screen for.
Yeah, just a moment. Yeah, you can share the screen.
Sir, can you see my screen?
Yeah, I can see your screen. Oh my God, sir. You have done detailed analysis. Okay, awesome. Yeah.
Sir, here actually you can see the 3 graphical presentation for the 3 fund. I think 2 fund already you mentioned, Canara Robeco and Axis Blue Chip, and I have taken one more fund, ICICI Blue Chip. Here, this 3 fund actually showing. If you see this fund, the right one, this is basically since 1st January 2012 to till date. The accumulated fund gain, actually, we can say. Okay. So regarding Canara Robeco, as we are discussing in Limelight, so Canara Robeco actually performed this after this COVID situation very well.
Okay.
But if we see the before COVID, since the beginning, Canara Robeco is the last one. I mean the least one actually. If you see the.
So for performance concern.
As far as performance concerned.
Okay.
So, and the right one is the combined picture, the since beginning till date. But if we break up the right one in this left 2 graphical presentation,
yeah, beautiful.
Then we can see the Canara Robeco is performing much better than after COVID.
Yeah.
But it's not like the before COVID picture is something else.
True. Beautiful. Awesome. Okay. This is this thing, beautiful data for everybody to understand. Awesome. Yeah, that is you see there is a shortcoming or whatever was a drawback. Drawback is you see VRO, Value Research Online, they give the ratings alpha, beta, and all this analysis they normally do for three years. Okay, so now 3 years consistently any fund performing well, so they come at the top. Okay, this is what happens. Now, yeah, 3 years is actually, let me tell you very frankly, 3 years is a short period, but unfortunately, 2 things happens. First thing is that Indian market is relatively new compared to the Western market. That is one thing. Second thing is that we didn't have organized data. That is the second thing. Even after even after the market happened, we didn't have any data, right? So we really had to struggle. We have to struggle for data. That is one thing. And third thing is that we had very bad market practices earlier, right? Scientifically. So people didn't understand. People didn't understand what, who goes there? Those who have not much knowledge. So they are there. So they bend their rules and everything. They did it in a very, very haphazard way. So when you come with a pure mathematical or financial mind, and when you try to understand and try to put, then you realize that some practices are there. For that, it's very difficult to actually get the understanding what the data is interpreting. Okay, so there's so many things. Okay, I don't want to go to that extent. Like, you, since you are a finance related guy, you know there's a badla. So now future is there, right? So future is very, it's a separate business. Okay, badla was a mixer of futures and cash market, and there is no definite expiry date, right? So you cannot. It's mathematical. Putting a mathematical model was very difficult. Okay, so because of these things, we have limited data compared to Western countries, developed countries. So what happens normally? Okay, 20 years at the most you can get like good data. That is also not sufficient, right? So that these problems are there. So that's why in a Western countries, when they do the calculation, normally they calculate in a very long period of time, right? But for India, and again, Indian market is more retail-driven market, right? Western markets are main retail people. Normally, they buy mutual funds. That is the trend. So that's what I'm training here, right? You guys, and I keep on saying, buy through mutual funds. Western countries already like that because they normally buy through mutual funds, right? So, but here our retail participants is more in the stock market, which is dangerous. That's why, the percentage of people losing money is much higher in India or emerging markets, right? So these problems are there. So these drawbacks are there. So we can understand that there are these drawbacks. Okay. So now you can do one thing. You yourself can do that beta analysis, alpha analysis. If you have a data over such long period of time, so you can do that analysis yourself. Then you can see what is the alpha beta of all this top 3 or top 4 or top 5. Why not? You can do that definitely. And I'd love to show it in my seminars and everywhere.
Yes, actually the concern is in short term. If I see from since last 3 years, you can see the Canada is performing very well. But if we see the long term, then in that case,
there's a mixed bag.
It's yes. In that case, you can see the ICICI also performing very good.
True. That is true. So you can see one thing, is there a change in normally nahi hona chahiye, but still, is there a change in fund manager? No, right?
That need to check. I am not sure.
Just check. Nahi hona chahiye. Normally it doesn't happen, but still, there is a possibility. I don't know. You never know.
Okay.
Yeah, Radhakant. Yeah, Radhakant has an answer to this question.
Yeah, I can't see his answer.
Okay, just a moment. Is the select focus area? I think there are a lot of questions happening. Okay, Radhakant, okay, just a moment. Okay, I'm taking you in. Just a moment. Okay.
No, I think he is saying can't compare. Sir, we didn't consider quant large cap in any discussion. We just consider quant focused fund only.
Focus fund, yeah.
Yeah, so I think he's didn't get the question.
Okay, just a moment. Okay, I'm finding it difficult. They have changed these things. Where is it? Okay, just a moment now. Radhakan, I am trying to. Yeah, Radhakan, yeah. Can you unmute? Radhakan, can you unmute?
Yeah, good evening, sir.
Yeah, good evening. Can you switch on your this thing video?
Okay.
So that all of us can see you.
Second. Okay. Yes, sir. So, to particular to that question, right? Why it is not performed before COVID? Then we have to go and see what kind of irrespective of this large or mid, whatever the strategy a fund manager makes. Apart from that, we have to see what kind of holdings they are having. See, for example, let's say they might have some manufacturing. Okay. So, and if they have in the manufacturing and automobile and all, right, if they are actually, they're holding more on that side, during COVID, they are the one who are the worst impacted. Okay. So their results has come, they are beaten up very badly. So to that, I will give an example. If you see Motilal Oswal, their best performing was 35 focus. Okay. So they used to, it's a concentrated, 35 stocks they used to, and they are very QCLP, I think, something, principle they are having. So they are very particular to that strategy. And if you see, that was the best performing, and that is now one of the, it is not performing well if you see, compare that. And I have spoken to the fund manager also because I was holding that. So then they actually put me when I wrote some of the queries, and he was telling that there are since they are very, very particular about that QZLP or QCLP, so they are also holding a lot of manufacturing, and they are saying that if you now go and put your money in the that multi-cap, you will see amazing results coming out. And so it is all depends on certain fund managers, because nobody knows COVID could have brought in this kind of thing. If COVID would not have been there, probably that fund would have been outperformed. So this could be one of the reasons.
Maybe because you never know. Only thing is that consistency, that's what in fact that's what Neil also trying to say. You see, somebody who is consistently performing for longer period of time, we'll have to go for that. Okay, so now since value research online, and most of the ET money also follows value research online, so since they only analyze for 3 years, so probably we can see some anomalies, and that's true. That may happen.
And sir, I think to your earlier point, if just because we are seeing some fund, let's say in 5-star category, we find 3, and some fund is actually giving 2 when you look at 3 years, but SR is saying look at the longer horizon, right? So when you see, then only will know the consistency in performance. So maybe we have to choose something which has given in 3 years 2% less, but in 5 years or 10 years it would have been always consistent.
Okay, so we'll try to do one thing. You see, and I am also having that thing in mind. Actually, we are extending our services. Now we are only giving coaching, right? So we have already started fund management. We have started. We are also we are going thinking to go that line, and when we'll be going in that line, we'll have our own research team and all. Okay, so when we'll have because I was known in research actually. So because I used to do a lot of number crunching myself. Neil is doing fantastic job. So I used to do it myself without depending on the industry. In fact, the industry used to borrow my research or my data. Okay, so hopefully going ahead we'll have our own benchmarks. Hopefully going ahead we'll have our own data. Okay, for example, Nifty, a lot of data we have got, right? Only thing is that earnings part, fundamental parts, we don't have much data. But for other parts, I can, so surely I can say what is the return for 5 years, what is the return for 10 years, what is the return for 20 years on rolling basis, right? So because we have that data. So hopefully, let's see. Hopefully, if everything goes well, we'll have our own data. Okay, so which are much more reliable. Okay, authentic data we must have ourselves. I think Neil will be able to help us. And there are a lot of one more guy was there. Was a very data guy from Delhi. So he had got a lot of data. Some basically engineer, right? Cannot remember his name. He was also a Bengali, but he was used to stay in Delhi. He is joined long time back, 1 year or 1.5 years back or something like that. Anyway, okay, Neil.
And sir, secondly, sir, regarding this quant fund, also I prepared some data as you were highlighting quant fund. If you see the another fund is the Nippon India Focus Fund is also competing this quant fund, sir.
Okay.
In if you see, yes, in short term you can see it's less than quant, but in long run, if you see this, it's almost competing with this quant.
Okay, Nippon
India Focus.
Okay, so this is what is its benchmark?
So benchmark would be the Nifty 50 try.
Okay.
This is the exact comparison. Quant Focus versus Nippon India Focus versus HDFC Focus 30 fund. These three are in same subcategory.
Acha. But these Nippon quant is 5 stars. So these two are what are the stars they have been given?
Nippon India, I think, sir, 4 star, but HDFC Focus is 5 star.
Oh, HDFC Focus is 5 star.
I'm not sure. It's a CRISIL score, sir. CRISIL score is 5 star. I'm not sure about the VRO rating. That I need to check.
The CRISIL scores are they are different. They are slightly different, in fact. I also don't understand. Okay, I can understand their debt rating, but equity rating, I don't understand. Okay, basically they are on the credit quality, or what is the probability of default. But that is not on the performance. I don't think CRISIL gives rating based on the performance. Okay, the performance is basically done on the Sharpe analysis and Sortino ratios mainly. Sharpe is number one, and Sortino analysis and all. So, but I don't think CRISIL really conduct such kind of analysis. So they have their different criteria. So I'm not very sure. So we'll have to go through Sharpe analysis and Sortino. So these are basically used for the portfolio management performance purposes.
I mean to say, sir, in long run, if you see, the picture will be something else. Picture will be like Nippon India is better than quant. That I would like to mention.
It may happen. It may happen. Yeah. It may happen. Yeah.
So,
it may happen.
So, sir, we should focus on this long term, right, sir? I mean, the short term, anybody can get. May better. I mean to say.
Yeah, that's true. That's true. But since we have no data, so what you do? That's the main thing. You'll have to rely on something. That's the main problem. So that's why I'm saying, once we get so minimum you see, minimum you have 20 years data. That's the main thing.
Sir,
so 20 years, 5 years, 10 years.
This quant actually fund house, sir. You see, there is a terminology I don't recollect it. So there is also a data which says that how many number of times they actually buy and sell.
Turnover ratio.
Turnover ratio, right? So if you see, quant is the highest. Okay, so they do bigger, much buy and sell, and this quant was actually clicked very well in US when this indexes did not perform well, and the mutual fund house also they did not give good returns. Then that is the quant actually. Quant is a logic, and quant is a mutual fund house also. So they used, the high quantitative processing efficiency, and using that they do a lot of buy and sell, and which is actually resulting in excellent, I think, return. If you see, for example, quant, if you see the small cap and the SBI small cap, there's huge difference. But I think SBI, is better in terms of reliability over a long period of time. But if somebody wants to buy, just play the market based on what sir has told, this Nifty P, right? Then quant small cap is an excellent thing. And also, sir, somebody was asking about Axis Focus 25. Actually, Axis, many of the fund houses, this was an article just 3 days before in Mint. Axis and Mirae Assets, actually, they are losing their charm. So their overall profitability, is going down. So that is in discussion actually. So
Axis Blue Chip you are talking about?
Axis
whole house, sir.
Okay, Axis house as a whole.
Yeah. So in Axis in particular, the long term, and Axis they select 25. I think they have that Focus 25, and there is another fund also, and Mirae Assets also large cap. So these Mirae Assets used to be the number one in return always. But I think these two are, so it all depends maybe on.
Yeah, Gopal is there, I think, still Gopal is there as CIO, I believe, Chief Investment Officer.
Right.
So I knew it. Okay. Okay, so now Neil, this is the problem. So my whatever you are saying, you have a very valid point you have rose. So in that case, since in India, you'll have to have your own data. If you really want to go for long term, minimum is 5 years. I do agree 100%. More is better because, if you follow the legends like Warren Buffett and all, or Peter Lynch and all, those who have experience of managing, for a quite a long period of time, they always go with long term. So that's always true because things keeps on changing. So somebody who is consistently working for long term, consistently giving good results over long term, so they can be reliable. Yes, 100%. No debate.
Okay.
Okay.
Sir, and the last question is regarding this Saptarshi's question. Saptarshi, I think, initially shared some data in financial planning, this Excel sheet.
Yes.
Right. Sir, in that sheet, you suggested to put that EPF amount in that, what can I say? Okay, let me. Can I share some other? I mean, you said to keep that fund, that EPF fund, into the retirement corpus. Like I will sell some house or flat, then I will get some.
Yeah.
But in that case, sir, if I'm showing that amount in that lump sum area, you can, then how can I include that EPF part in my salary?
No, in that case, you cannot include.
But you said like that, sir.
No. I gave two options. Either you show as an investment and include it as a salary, right? Because your take-home salary, it's a logical thing, right? If your take-home salary, you have take-home salary means EPF has been already gone. After that, again, if you show that I am paying EPF, you will be automatically minus, right? It will be difficult. It's a logical thinking only. So if you take it as a pen, like a lump sum, you cannot include it as EPF. Then you will have to say this is my take home, and from here I am doing that investment. That's why I am saying, if you are taking only take home, then you do the calculation of the EPF, how much you are expected to get, and then delete it, and you put it as a lump sum amount as a pension.
Lump sum during retirement I can put a house or flat selling, right?
Exactly.
That I can't include in my salary.
No, you cannot include. How can you include? Because it is not in hand, right? Directly
yes.
It is going, na?
Yes.
Yeah, so you cannot do the double counting.
Yes, sir.
Either plus or minus. You cannot do double counting. Understood?
Yeah, that was the confusion. Thank you, sir. All my doubts are clear now. Thanks.
Okay, thank you so much. Yeah.
Thanks, sir.
Okay, Radhakant, any other question you have? Radhakant, any other question? Now it's your turn.
Yes, sir. Sir, I have few questions.
Yeah.
Sir, first one is very basic. How safe is mutual fund? Meaning, we know that equity investment are subject to market risk. That we know. So unless there is a change in the market overall thing, but let's say somebody stayed invested for a very long period and gets retired, and then is there anything happens where fund houses say that they go bankrupt and they say that your money is lost?
You see, there are two things. First thing is that money is lost cannot happen, right? Because they are investing until and unless wherever they are, they are investing in, say, SBI, Reliance. SBI, Reliance completely go bankrupt, right? They vanishes. Then your mutual fund will also vanish, right? So this can never happen. Okay, this is the first thing. So the riskiness is because it's fluctuating, right? Market can go up and down. Okay, 25%.
I mean, otherwise, the fund house, can they do something the way the debt fund happened for Franklin? Okay. Is there anything that that kind of thing happens? Where
that can happen. That can happen. But your money is there. Franklin, do you think the investors lost money? You know what happened, Franklin? Exactly. Franklin,
because of some hoax, I think people started withdrawing money.
No. Actually, technically what happened? You know that technically what happened?
No, sir.
Technically, whatever, let me tell you. So they invested in illiquid stocks, illiquid debts. You're getting it?
Yeah.
So suppose I am taking your money and say like I have started one small cap fund. Okay. Small cap fund is a micro cap fund or something like I am just those who are very budding small companies I am investing there. Okay. And I made a lot of money right now. I got a lot of money and I'm investing in very, very small companies. And they are expected to do well and they are really doing well. Okay. But one time what happens? So these companies are not very liquid. It is not that everything. So how I bought, I did private deal with that all the fund managers, promoters. Okay. One by one, I approached them. I said, okay, I'm a fund manager. I have this many crores of rupees. I want your share. So they were also happy. Okay, some good investors are coming. They are giving me shares. Okay. So that way, like, I have distributed my fund and I'm comfortably, I'm sitting. Somebody has come, says, sir, I need money. Okay, fine. Okay. So now I need to sell it. But where can I sell the shares? They are already invested. It's illiquid. Okay. Similar things happens with the Templeton. So they distributed money. So they got the money. This money were invested in debts, those bond market, debt market, and those instruments which are not very liquid. So they are still invested positively. That is giving return. But the thing is, there is nobody to sell. Until and unless there is somebody, so you are giving him money. So this is your money. Give me my. So this is your schemes. Give me my share back. So I'll have to sell that, right? I'll have to sell the shares. Then only money will come. But there is nobody to sell. So when there is nobody to sell, people are thinking because people do not have knowledge, right? Majority. So they think it's going bankrupt. They're not going bankrupt. Their money is there in the debt. And now you see that a lot of people who are redeeming now. So what happens then after that? After that, we'll stop it. No redemption happens. Because shares are not available in the market. How can I sell it? But they are appreciating. They are all appreciating. They are moving fast, growing fast. But nobody wants to sell shares. Nobody wants to sell the debts. So how can I get that money? You're getting it? It's a question of illiquidity. That's what happened with Templeton. Now, a lot of people who are getting their money back, they are getting much more. They came out of panic. Okay, hey, give me our money. You are going bankrupt. Why? Because people don't understand. They didn't get money. Now they are starting getting money, and now they are getting much more. Because some of the debts are really doing high. Of course, now interest rate has gone up. Again, they will start making losses most probably. That's a different story. Profit and loss is different story. It was a liquidity problem of the underlying instruments. Got it?
Got it, sir.
Okay.
Yes. Sir, so I have invested in some of the index funds, and I wanted to buy it for my spouse also. So do we need to go for different fund houses, or we can go with only one?
You see, like there is a problem happens, right? Problem happens, right? How the problem happens? So it's always better, you keep separately and right will. Why? Because in case you keep combine, this happens. So you are having a combined what is called your combined demat account. Okay. So now you are the prime and investor, right? So you are making investments, you are filing returns, right? What the tax authority will see? Tax authority will see your wife. She is having so many shares. Okay, where she has bought. Okay, and they send notices. It happens quite often. Okay, so they will send notices, and after sending notices, like you'll have the ADAC. You go to the CA, write to them that this is like this. Okay, so then they say okay, fine. Again, after so many years, again they will send notices. You have got so many shares. Again, you have to give the explanation that I have already filed a return and all this stuff. So this is a big ADAC happens sometimes, right? So that's why to get rid of it, the best thing is that keep it separate and write will. Okay, if something happens to me, this shares will belong to her, and she also can write will. Something happens to me, this okay. So that's why will becomes very handy in this case.
Yes,
because otherwise who will and tax authorities the government people ask you questions you will have sleepless night, they will be sleeping peacefully.
Yeah, sir, my question is more on mutual fund actually. So
same case.
Yeah, so index. So I have bought my index fund, let's say, and I'm going with the lowest expense ratio for index fund.
Index fund, beautiful, yeah.
Yeah. So the other fund, can I go with the same fund for my wife? For mutual fund I'm talking about, she has different account.
You can go, why not?
Same we can
yeah, of course, why not? Because ultimately you have chosen, okay, he is the right person, right? Yes. Right thing. So definitely, you would also like to have it. You have to give wife also, and everybody, your friends also, hey, you see, this is good, right? Definitely.
Best,
yeah. And if there is a doubt, okay, this is also good, this is also good, right? Then you can say, okay, I am taking this, you take this.
Yeah.
Right?
Got it.
Yeah.
Sir, few more questions on the Excel of financial planning. Is it
okay
to share the screen?
Yeah, quickly, we have another Amburas is there, Depok is there, Redo is there, 3, right? Already 11, 12. So quickly, please go through.
Okay, sure. Should I share or I can? Okay.
Yeah, you can share. You can share it.
Okay, all right. So you can see my screen, sir.
Yeah.
Sir, what is this post-retirement return on investment? What does it actually mean?
Okay, you see, where will you suppose how much money you will be needing? Total 40 lakhs, right? 40, sorry.
4 crores.
4 crores, sorry. 4 crores you will be needing. 4 crores, where will you keep? Where will you keep that money? We'll have to keep that money somewhere, right?
Okay.
Right?
Okay.
Where will you keep that money?
Okay, so the return of those.
Exactly.
But sir, where here we are, whatever we are calculating, those things we will have already the returns, right? Let's say mutual fund returns.
Till your retirement. Okay. These are returns till your retirement.
Okay, got it.
After retirement, so post-retirement.
So then it cannot be 10%, right, sir? It will be somewhere around 4-5%.
Not necessary, because it depends on how active you are, how smart you are, where are you putting money.
Okay.
4-5% definitely not, because now you have knowledge, and by that time you will have more knowledge. Okay. But of course, after beyond 70, 75, then probably you might be tired, but that's fine. Okay. Okay.
Okay, sir.
But still, you can keep it conservative. So normally when I make somebody's plan, normally I try to keep it somewhere around 8% or so. Like those who are knowledgeable. Those who are not knowledgeable, for my students, it will be 8%, 9% or something. 10% is also there. A lot of people are very aggressive, okay. So if you are like that, it depends on you. So it's like that. So in that case, your requirements will come up, because ultimately, everything has been calculated, right? Those who do not have knowledge, so those who are purely come to me only for the purpose, planning purposes. So for them, I keep it 6%, 5%.
Okay, right? Got it, sir. So this corpus required for the first year, why it is so much, sir?
Because you'll be needing that much of money. As soon as the first year you retire, you'll be needing that much of money. You don't have to worry. Everything 4 crores you need, right? Everything has been taken care of. First year you'll be needing that much of money, because 2,13,000. That's what you will withdraw, right? Every equivalent monthly expenses at a time of retirement. Yeah. So 2 crores 13 lakhs, and then you will having at 8%. At 8%, post-retirement return on investment, post-retirement return on investment 8%. Considering that, your first year requirement will be 25 lakhs. Yeah, 25 lakhs.
And after that, it's
25 lakhs. Then next year you should increase it by again 6%.
Oh, okay. In inflation.
Yeah.
Okay. Yes. Got it. And so this is if we are getting a return and there is a tax that we know for sure it will be levied, then this is what the column we need to fill on, right?
No, here when you are taking mutual fund 12%, you are considering, right? Mutual fund 12%. So if the 12% is the exact return, you can deduct 1%. So you can consider 11%. If it is 15%, then 14%.
Okay.
In case of everywhere. In case of debt fund, you can make it 0.5%. You can deduct. Okay, this is a lump sum. Exactly will be different, because exactly nobody knows, right?
Yeah.
But lump sum.
Got it.
Got it?
Correct, sir. So the last one.
Yeah.
So this in our workshop also, let's say the education, when we were talking about the present value, how, in what way we are going to take this present value, sir?
Present value is like, normally what we say, like, totally suppose, this engineering college, how much it charges.
So let's say, somebody is in school right now, the kid is in school. So are we taking throughout the, period of their education, or this is per year, or what kind of value is this?
This is a total. Suppose 4 years education total. Okay. Total this much. Because when you have long period of how many, 13 years, right? 13 years, you can take it total, and then total is this much you will get. And when you will be withdrawing, you are not going to withdraw everything. You will be withdrawing like, 4 years. Periodically. Okay, so that's fine. Slightly here and there, and you'll be able to manage, at that point of time. But at least your major substantial corpus should be ready. Rest of the things you can take risk, right? Well, I think this much we can manage. Got it?
Got it, sir. That's all, sir. Thank you.
That's it. Yeah. So you have got that, entire planning done?
Yes, sir.
Okay, great. Kitna surplus hai?
Sir, actually, मैं अभी surplus 31,000.
Huge, yeah. Huge. What are you doing with that money?
No, sir, this is only 31,000 per month.
Per month, 31,000, like, you if you have to, like, go to pubs, like, it's a huge.
Yeah, sir, some discretionary few things are there, which was not included, like travel and, other stuff.
Okay, fine. Okay, it's up to you. Well, that's great, right? That's a respectable amount, right? 31,000 per month. Discretionary is a good. Okay.
Thank you, sir.
Okay, you're welcome. You're welcome. Yeah. Okay, can you just stop sharing?
Yes, sir. I'm just looking.
Okay. Okay, Deepak, Mr. Deepak Subbaya, are you there? Quick. 11:19 already. Okay. Yes, sir. Yes, sir. I'm taking you in. Yes, sir.
So, first, I will share the financial planner. Then I also have one more this one.
Yeah.
In the financial planner, I need to share my sheet once again.
Yeah, please do.
My screen is visible now, sir?
Yeah, we can see it.
So, income is around 2 lakh, yes, and non-discretionary I've taken 75. And we get annual bonus of sometimes similar to salary, which is 2 lakh. And what my doubt was now here, of course, we'll come back to this. First, I wanted to know whether everything I filled up correctly. Post-retirement expenses roughly around 75,000. And
post-retirement expenses 75,000. You see, so this looks very high to me. Because why? You see, today you need money for savings, right?
Yeah.
After retirement, you don't need money for savings. You after retirement just for eating purpose only. So 75,000. So you do the recalculation. Will you be really doing?
Actually, I had made it 50. I just increased it now, and I think
50 is also too high. Yeah, but anyway, 50 is a 2 lakh. I'm pretty sure, like, you go to, like, all the pubs and all.
Yeah.
You go, right? No? Yeah. Okay, but even then, after retirement, like, so we are almost of same age, right? I am slightly 2 years senior to you, right? So, in fact, nowadays, I don't feel like, going there. Okay. So
I'm probably planning my retirement early and trying to spend some time. Probably I would be expecting to spend something.
Okay, fine. Okay, so go ahead. Like, if you can manage it, like, obviously, like, you should go. Okay, but only thing is that remember this thing. So you need just for eating, like doing traveling and all, like
Yeah, it will be
yeah.
mostly eating and traveling only.
Yeah, that's it. Okay.
And other one was, of course, I've taken 25 years for life expectation.
Okay.
What
So
I
you
don't
are
understand here is, again, same thing. What question maybe previously Ravikant asked. This corpus required first year, like this will be like after retirement. This will
after
be
retirement. First year when you retire,
yeah.
just the year you retire, you'll be needing that much of money. First year.
First year. And one more doubt which I had was in this. This is not pension, actually, is EPF.
Okay.
Provident fund.
Okay. Okay, beautiful.
So this is a current value of the provident funds now. So if I'm working for them, then this will obviously go up. I don't know how much it will go up.
Okay, so that you can do that calculations quickly. Roughly, you can do that calculation.
Can do here only, sir.
You can do like like in this planner itself. Go down.
Yes, sir.
Just go down. Okay, just take one this thing temporarily. You can take that last one. No. Yes. Before that, it's I cannot see here. This is 49, 40, 45. Like goal A, the last one, that blue cell, last one. Before that, above.
Yes, sir.
Yeah. Here anywhere, either of these two. Now you give how much? What is the percentage you will be getting? Somewhere around 8%.
Yeah, 8%, sir.
8%. Put that 8%. 8%.
Yeah.
Okay. Right now, how much? Right now, what is the
value?
amount? 40 lakhs.
40 lakhs. Yeah, 40 lakhs.
Yeah. Put that 40 lakhs in the next column.
Yes, sir.
40 lakhs. Yeah. Can you just slightly go upward so that I can see the headings? Okay, present market value. Right now we have 40 lakhs. Okay. Now every month, how much you will be putting? Right now, how much total amount you are putting?
Monthly, it is around 30,000 is a contribution from mine. So company side will be maybe around 60.
Okay, 60,000. Put 60,000 total. So on an average, how much will be the annual increment? On
salary, sir. Salary will be around. I can take conservative 5%.
5%. Okay, so 5% accordingly. This will also increase by 5%, right?
Yeah.
Okay, so around 2 crores 19 lakhs. Now you can delete this. Now put EPF 45 lakhs. You replace with 2 crores 20 lakhs or 2 crores 18 lakhs or something.
Will it be so much, sir? I mean, in the next 10 years, will it become so much? That's what is my doubt, actually.
It will become so much because 8%. Okay, so you can consider slightly less if you are thinking like, no, that's too much. So now you don't have to actually do planning for your retirement separately.
Okay, only with this amount it can manage. That's what I want.
Yes. So you can retire today, most probably. I don't know. Like you can do that calculation. Probably tomorrow you can.
So if I retire today, I'll only get 45 lakh, no, sir.
Yeah, then of course, yes.
Yeah, so
yeah, if I retire today, then you'll get only 45 lakhs.
Yeah, I have a service of 10 more years is there. So this probably is a benefit of the compounding is what you're taught.
Yes,
I think.
Exactly. Okay. So you can do slightly. So you can keep 2 crores, right? You can keep 2
so
crores.
one more doubt was this, sir. If I retire today and keep this money in the PF itself, it will still earn this much in the next 10 years.
Yes,
right,
exactly.
Sir?
But you will not get that every month
increment. Yeah. That increment 5% what we have taken, that will not come.
Yeah, that will not come, and your employee will not contribute.
Employer share will not come.
Yeah,
okay.
So that's right.
Okay, understood. So fine, sir.
Yeah, so you can do that recalculation. Yeah, you see, just for everybody. Okay, this itself is a calculator. Okay, so you can I have just shown you. Yeah, I have shown you that way, so you can do that calculation here, and then you can put it in the proper places. But don't leave it there. You'll have to delete it. Otherwise, it will be double counted, right?
Yes. Okay. And so if I assume that currently this is at maybe that increment is not there. If I want to plan early retirement, maybe next 5 years, so I can reduce this to 1 crore there.
Yeah. You can do that calculation here. Whatever is your plan, you can do that recalculation the way you have done it. You can do it. And you can put the thing, and then you can calculate it out whether you can retire early.
And one more doubt I had was this Yeah, I'll have to remove this. Yes, sir. I think 1,50,000 I had put as investments. So I don't think I'll be making that much per month.
Okay.
So currently, I'm doing or I'm planning to do 23,300. That's a monthly investment which I'm planning to make on the
Okay.
mutual fund.
So
This is for the mutual funds.
okay. Okay.
So with
And
this,
so you have 13 lakhs shortage. If you are taking 1 crore, because on my EPF you have considered 1 crore, right?
1 crore. Sir.
Yeah. So in that case, like if you do early retirement, then you'll have to first you'll have to change the date. Retirement after say what, 5 years, 2 years, 1 year.
Yeah, 5 years.
So
So 5 years.
time till retirement here. There you'll have to put it 5. Where your cursor is there, right? Same. You can see that cursor.
Right,
Your
sir?
cursor. Okay, it's my cursor. Oh, sorry.
Okay.
So this is your that rate one residual monthly amount to be then after that.
Residual
I think it's
monthly
20.
amount.
Yeah. Here you have to time let it make it 5. Okay, then now post retirement expected lifespan will go up. So there's some that challenge will come. It will be whatever 30.
I'll
Just
keep it
5 is there.
30. Okay, sir.
Okay, 30, 40. Okay, so now of course since it is coming nearer, so your requirement is also coming down. 1 crore 79 lakhs now. So 1 crore you are getting from EPF. After 5 years, what will be the EPF amount that you can calculate? And you can put it.
Yeah.
You can calculate
after 5 years EPF.
So
this will reduce, right, sir?
That may reduce. You can just
I can calculate here and find out.
Recalculate. Yeah. Do the calculation. 45 lakhs. Put 45 lakhs. There itself, like above on that. What is that? ADC mid duration. Na? Below that, do the recalculation. Here also you can do. Yeah, here also you can do. Anywhere. Any blank where you have not done any calculations, you can do that calculations. Yeah,
45 lakh and there'll be
60,000. But this is 13 years. No? You'll have to do there, not here.
I'll have to do it here only. Okay, fine.
Yeah. Around 1 crore 14
So
lakhs.
1 crore 14.
Yeah.
Yes.
Okay, so now only 12 crore.
This I'll have to remove, sorry.
That you remove. Otherwise, yeah. So 12 lakhs, 13 lakhs, you can say. 13 lakhs you'll have to manage.
Yes, sir.
I think I'll be able to manage it, right? Next 5 years, 13 lakhs.
So I was not able to understand if 13 lakhs is there actually this on the top here discretionary and what is this I'm not able to understand.
You see, like what I am doing, every time you are putting some investments, right? It will be deducted.
Yeah.
You're getting it. So you see, like first.
So if I make a.
You make it another. How much is there discretionary? So 42,000, right? So you do not need 42,000 discretionary expenses, right? So how much you need, like roughly every month? Going to every month.
This will be including current this one, right? So 30,000 I will request. I can spare another 12. Yeah.
Okay, 30,000, another 12, right? So another 12. You can ABC mid duration. You can add to any of the funds. In fact, you can add to the existing funds also. Instead of 23,300, you can make it 23,300 plus 12,000 also. Whatever.
That is 35,500.
35,500. That also you can do.
So if I invest 35,500 on a monthly basis now, I should be able to.
Yeah, only 2 lakhs will be there. That's fine. 2 lakhs. Yeah, at least another for 2 lakhs, like you can make some. You can increase it by 35,000, 36,000. You can make it. Make it 36,000. Let's see. No, you have to make it more. I think
1.8.
Yeah. Or you can increase it by. Okay, fine. 8% is fine. Okay.
Positive.
Yeah, 40,000. So
maybe around 38.
Around 38 also, roughly. Yeah, that much. Now you go to discretionary, non-discretionary. Now 30. How much it is left? 27,000. So it's
Yeah,
more than
27,600. Yeah, that can be managed.
Yeah, that's managed.
Okay.
What to do?
Yeah,
So where
thank
do
you,
you
sir.
spend?
Now
Like,
I was able to understand this.
yeah. Discretionary, where do you spend? Discretionary expenses go to where? Like, because 27,000 is a big amount, right? Discretionary expenses like for fun.
Yeah, discretionary will be there, sir, because on an average, the credit card spends are coming close to around in the similar range. So this includes everything in the sense house, this one.
Okay, so this is high, yeah. Because of course, looking at your income, its proportion is okay, but still, 27,000 every month, on discretionary. So I think you spend a lot of money on shopping, I believe, right?
I mean, something or the other will be coming, sir. I mean, that's why I've kept it.
Okay, okay, fine.
Yes,
Okay, fine.
fine,
But
sir.
it's
So
good,
this clarity has come.
Yeah, clarity has come. So you can retire after
Yeah,
5 years, right?
yeah, that's the plan, sir.
Yeah, yeah.
And thanks for that stamping. I think I got the stamping back now. I've got confidence on that now.
Thank you so
So
much.
one more question was, this is a personal question. I'm sorry for
Yeah.
others to get this. This basically, my friend has taken a loan in my name, which is 15 lakhs.
Okay.
And he has paid only for it is a 5 years term. EMI is around 33,000. He has paid only 2 years and stopped. Then I completed the entire payment and closed the loan as on date. Now he has paid 5 lakh back to me, and he's coming back and telling me I only have to pay you another 5 lakhs. That's it. So I'm a little bit confused. How do I calculate that? How much do I actually get? I'm supposed to get in this.
Okay. Okay. So now, but you paid the EMIs, right?
I paid the EMIs completely.
So you calculate out all the EMIs, total EMIs. In fact, that is also not correct. On that, you must charge some rate. But let us it's a forget. Okay, forget that return interest. But at least you have added all EMIs.
I have the EMI. Yeah, EMIs I have.
Okay, so you have
the
added
problem is he has paid 5 lakh. He has paid 5 lakhs, so he will tell that out of 15 lakh, on calculate only for 10 lakhs. So that I'm not able to get because I don't have any calculator. I just got a bank statement telling that this is the EMI 33 and.
No, you'll have to add the EMI. So I paid this many EMIs, so you'll have to repay me the EMIs. Even that is also not correct. Actually, he will have to give actual finances. You have paid EMIs, and on that EMIs, there will be interest rate. Are you getting it?
Yeah.
If on that EMIs, there should be interest rate. But okay, he's a friend, forget that interest rate. But he should pay you back the EMIs. Just add all the EMIs, he'll have to pay. Because that's right. Interest rate, who will pay the interest? So he's taking loan on loan, kind of. Are you getting it?
Yeah. So all the EMIs I will add from the second year till date.
All the EMIs you just add up. Yeah.
Including the 2 years also. What he has paid for 2 years. Remaining 3 years I have paid.
So whatever you have paid.
Whatever I have paid, yeah.
Whatever you have paid, just add them up.
Completely add them up.
Completely add them up. It's an every EMI. So I paid this much of EMI. I don't know what is your loan or whatever. I paid this much of money to the bank. Now you give me back. That's it.
That's it.
Yeah. This is actually you are not making anything out of it. In fact, you are sacrificing.
I'm not. Yeah, I don't want to make. I just want my original money back.
Original bank. So you'll have to get all the EMIs. Add up all the EMIs, and you give him. I paid this much to bank. Please return me. That's it. Very easy calculation. Okay.
Yeah. And thank you for this. This calculator really lifted the burden a lot. Thanks a lot, sir. Once again.
Thank you. Thank you.
Thank you.
Okay, then. Okay, Anburaj. Anburaj, are you there?
Yes, sir.
Yes. Can you just switch on your camera?
Just a minute, sir.
Yes. Now I can take you in. Yes, sir.
So good evening, sir.
Good evening.
Earlier I shared the questions.
Yeah, you can share. Your voice is not very clear.
Oh, is that?
I know there's some breaking
Okay.
of voice.
Now it's clear, sir?
Yeah, it's better, much better.
Okay. So earlier I have asked two questions. One is regarding the education loan. For example, if I take an education loan of 10 lakh with an interest rate of 12% or 15% today, after 2 years, what would be my outstanding balance, and from when the interest would be calculated by the bank?
Interest will be calculated by the bank as soon as you take the interest, take the loan.
Loan, not from the completed education period.
No.
Okay.
Normally, okay. But be clear, ask the bank what is their policy, right? Because but normally any financial institution, always remember this, any financial institution, their charges starts as soon as they give you the money.
Okay.
Okay. So now remember, when there is during the COVID, there is a gap, right? They gave 1 year moratorium, 2 year moratorium, right?
Yes.
So they didn't collect that EMIs, but they charged you. They added all those interest, and after that, during that 2 years or so, whatever, like moratorium, during that time, whatever was the outstanding loan, that inflated. So then normally, until and unless somebody like governor, like RBI or government, like president, they will never do that. They will always charge the interest rate, because this is how that the entire finance market is. Okay. So as soon as they gave you money, their calculation will start.
So, for example, if that person start earning, first he can focus to complete all the education loan first, instead of focusing his saving part.
Yes.
Okay. Yeah.
So yeah, ideally, yes, this is like that. Yeah.
Okay. So another one question, sir.
Yes, sir.
Is that advisable to take the EPF amount and they are giving 8.1% at present? So okay, can we take that amount and invest in mutual fund?
You can do that, provided you have that much of confidence that you will be able to earn significantly more than that, around 12%, 15%. Let me tell you. Let me give you a tip. Tip is, when the market will come down, right? When the market will fall, okay? So then you do that.
Okay.
If you really want to do that, okay? When the market falls, when the market piece, in case market P comes down to say 15, 16, right? So when everybody will panic and everybody will go out of the market, then you do that.
Okay.
Okay. You will make a lot of money.
Okay. So not now. Now it's average.
No, now it's average. Like, there's a 50-50 chance.
Yeah.
So it is giving 8% return, right? 8% guaranteed return.
Yes.
Okay.
Yeah.
So now, still, like, if you are very aggressive, closely monitor it, right? It's a professional fund manager, professional equity guys. They will never invest in all those where returns are fixed, because returns are 8% is a huge return, of course, fixed return. Okay. So they will not do that. They will always invest in equity, because they know in equity they can earn more. Okay. So now it depends on you, but I am giving you just a tip. Right? Once it comes down, then after that, if you invest it, then you sure you are going to make a lot of money. So now, since there's a 50% money, let that money be stable out there. So you are in job or this thing, you are in job or your business?
Actually, I resigned my job. So now I thought of starting equity.
Okay.
Like investing through mutual fund, like that.
Okay. Beautiful. Okay. So if you are full time into it, or you are giving a substantial time into it, then you can do that. Okay, then you can do that. But there is a risk, like it might come down. Yeah. So that's why, like when you were doing such kind of thing, it's always better, like you wait till the market comes down. Okay. When the market really, and normally what happens, when the market will come down, everybody flees, everybody book losses and go out, right? Now that is the best time to invest in money. Market. Yeah. Okay. And we know that now today, like we can understand that, right? Yes. Yeah.
And one more thing, sir, how to choose the better platform? For example, in mutual fund, we have, you said the coin through Jiraba. Yeah. And also we have INB money, etc. There are so many apps are there. And what is the difference of each app or platform? Likewise, for example, for debt fund, like Win Wealth and Golden Pie, there are other things are there. How to choose the best platform? Okay, you see, this is something, how to choose where whoever is giving good services. Good service means what? Good service means only thing is that, okay, nowadays everything is app based, right? So if the flow is, most of the apps that you have heard about, they have the good flow. Okay. Only thing is that support. Sometimes what happens, not sometimes, quite often, like some calculations we do not understand, they have deducted something, right? Now, for example, coin also, right? So of course, I don't call them up, but like I have clients, so I can make them call. Okay, please, because so I manage in a different way, slightly different way. So call them up and then I understand, because they only answer their registered number. Okay. And when I manage others' money, I do not keep money in my account. I keep money in their account only. Their account, they are this thing. So only I manage it. Manage it means I take the decisions, right? This is how I manage. So obviously, registered mobile number is my client's mobile number. Okay. So I ask them, okay, these are the questions I ask them, why they are charging this. Now, this is very, very important. So you need somebody who can pick up your phone and you clarify, okay, this is what we have done, or this is what is happening. You're facing some problems. There is somebody who can really will give you a call or answer your call and clarify you. Okay. So this is important. So this is the most important thing. Others are okay. Others are all plain vanilla. Now try to find out which one is the best. As I have said, I have been using actually phone call only. Okay. Till recently, right? Only a couple of months back, I think less than 1 year back, I started using coins and all. Otherwise, I used to give call that guy. So of course I used to choose myself. So I just give him buy this for me, sell this for me. So he used to do that till now. Okay. And he gets commission. Okay, that's fine, because I don't have to take ARAC. That was my approach. Okay. Now only I have started using coin. Okay. Good. Thank you, sir. Thank you so much. You have made your plan and all, everything plan created. I didn't go through fully for that purpose. Okay. Just I observed. And also I attended the master class. This week, probably I will go through all the modules and would complete, sir. Yeah. Thank you. Thank you so much. Okay. Welcome. Yeah. Yes. There is Anbura. Okay. Yeah. We do. Yeah. Can you unmute? You are the last one to ask question.
Hi, sir. Good evening again. I'm coming back. Yeah. I was the first to start and I had an add-on question. Yeah. It's very late, so my video will not be on. My child is sleeping over here. Okay. I found this a really interesting conversation. It's the first Q&A that I've attended end to end. So my question is very specific. I have a corpus sitting in my FD because I've always played safe, even in my 8-10 years of experience. I have a corpus of 32 lakhs. So if I keep one a 6-month expenses as a safety money or emergency money, I would still have a good 25 plus lakh. So can I just break it? And what I realized is recently I broke some FDs and they charge a tax, a 10% tax, plus if it's pre-closure, then 1%. So at this stage, does it make sense to break my 26-30 lakhs, put it in one, large cap whether it's Quant or Canara, Robeco or Axis Blue Fund.
Now you
Mutual
see.
fund.
Now, yeah, I got it. Now you see. 10% they have deducted. So if you're thinking like, they have deducted 10%, and then after that, again, when you break it, it's not like that, right? So 10% they have deducted. So that is deducted as a TDS, which will be adjusted against your income. You're getting it? So now it is not that you have broken it, that's why they have charged, right? It's not that. Probably you have that's what you have seen. But anyway, your nowadays what is called like the trace, right? So they have been deducting from your interest, they have been deducting your money, whatever, like TDS, and they're putting in a trace. And when you are filing the return, that thing is calculated. So whatever interest rate you are getting, you have been paying as per your tax slab. You have been paying it. Probably you are not aware. Okay. So now don't think like that because you have broken, that's why they have charged. No. Anyway, they are going to charge. They will charge it. Okay. Now 1%. You said tax part is clear. Like they will anyway they will charge. It's because it's not you, it's the government they charges, right? So they'll have to 10% they charge like before and after that it's being adjusted. So ultimately it is being adjusted. If you are paying more, then it is like you get the refund when you file the taxes. Sometimes you get the refund. You get the refund because of all these things. They have deducted 10 rupees, 10% or whatever on the interest rate, right? So that gets refunded like if they have deducted it more. Okay. So now this is one thing. So that is, forget it, like you are paying more taxes when it is in FD. That's for sure. Second thing is that 1% thing that I didn't understand actually. So they cannot deduct 1% just like that. No, they cannot do that.
1% of the interest accrued. Like if you do a pre-closure of an FD, suppose I have all of them like 2 years, 3 years, and I didn't know better. I mean, I'm very new to this mutual fund world. So I used to just keep it in auto renewal because I didn't have that expenses. We had 2 people working.
Okay.
So I didn't have the expenses. It's just, sitting in the FD. So because they'll all be pre-closures, they'll charge 1% of the interest accrued.
Okay, of the interest accrued, that's fine. Interest accrued, 1% on interest accrued if they are do that for pre-closer. Okay, because it's on interest accrued, not in your capital. Okay.
Not capital.
Not capital. So let them do that. It's much better because you are paying taxes. 6% you are getting or 5% or whatever. Like even if 6% getting on the 30% taxes, right? So 1.8% gone, almost your 2% gone. So how much? 4.2% return you are getting. Okay, not worth it. Until you are a businessman or you need money frequently, then it's a different story. So you can, for your mental thing, okay, fine, okay, this is there. Immediately I can withdraw money. I also keep some money in FD, but there's a sweep in, sweep out account. Okay, so once that becomes big, I just take a chunk of it and I invest. That's what I do, right? So that's a different story. Otherwise, there's no point keeping so much of money in this thing, FD, unless your transactions.
Right. So does it make sense to just put it in one? I'll just pick. Today we saw new ones also. We saw Nippon India also. Someone was talking about that.
Yeah.
Should I just park the money there? 26 lakhs.
You follow your this thing. For what purposes? Is it for some goal? Ideally, it should be on goal based. You have seen people have shared their planners.
Right.
For retirement, right? So in retirement goal, put it under retirement goal. You put it. Definitely. It should be 5-star. And it should be your risk appetite. Right now, looking at it, so there are 2 things. One is your goal. One is how is the market. Market is now 50-50. Okay. It can go up 50% chances that it can go up, 50% chance it can come down. Okay. So this is how the market is. So at this stage, so if you're very conservative, you can go with Nifty 50 fund. Or if you're slightly aggressive, then you can go with large cap. So amongst large cap, you have seen. Today we have seen a lot of large caps, right? Choose one 5-star large cap fund and be there. Once that market corrects or market goes up, then you'll have to change it. Okay, you'll have to keep on changing. And that's why you are here, right? That's why you have got that knowledge. So you can do that, I believe. Okay, and so at least eventually,
Right. So index is safer, right? How much would an index give? And Ramakant was mentioning he's identified some index funds which are, which he's investing in. So like for retirement fund, index would make more sense, right? I'm generally conservative by nature.
Okay, then you
Hence,
can,
such
yeah,
good
yeah, yeah.
purpose, right?
Yeah, then put it in the index fund. Yes. Put it in the, if you're conservative, put it in the index fund, because that will not move much. Okay, large cap funds, like, compared to index fund, that will move fast. Going up also fast, coming down also fast, right? So this mid cap, like, as you say, it's a beta, right? You see, index fund is the beta 1. Large cap will have some beta, more than 1. Okay. So yeah, it's like that. So you know the calculation yourself, right? So it's like that.
Got it. Got it. So on that note, I did like demarcate like another, like I have my accounts in 2 banks. Both of them had about like the same corpus, 30-35 lakhs sitting in FD. So from one bank, the Axis Bank, I put it in a bunch of like the 3 funds, some in SIP because it was before your course, and some large chunk, like I put demarcated 20 lakhs for a ULIP. I didn't know ULIPs were so bad before your course. Then I've demarcated 10 for a open-ended mutual fund. Plus, I have already started SIP. So in a way, they're all in large cap. From that perspective, I should probably put my other bank, like my ICICI corpus of 30 lakhs into index, right? Because I've already, in a way, committed to large cap. And ULIPs, which I cannot break now for 5 years at least. That would make sense.
Yes,
okay.
It makes sense. Yes. Okay. You got the knowledge. You got a good knowledge, right? Yeah. Yes, my pleasure.
Yes, but you also want to optimize your returns. And I also want to retire, even though I'm 38. I'm tired. I have a 6-year-old. I just want to, basically, I want to take a short break and then come back. So from that perspective, also, can we use the planner for a 5-year gap and then come back? Can we use the same planner?
You can do that. You can do that. You'll have to give it like, in 2 parts. So yeah, of course, if you are, but using that gap also, like, if you want to continue, like, your investments, like, all the SIPs, etc., monthly contribution, etc. So, that's fine. Okay. Doesn't matter.
Okay. Okay. All right. Thank you, sir. I think I'll go for the index fund. Yep. Thank you. I'm the last question, I believe.
Okay.
Thank you.
Okay. Yeah. Okay. Bye, guys. Everybody. So please, those who are 2 things, those who are yet to finish that course, please finish that course first. Second thing is, those who are yet to join the Telegram group, please join the Telegram group. It is very helpful. Like, a lot of good people are there with a lot of knowledge and a lot of experiences. So they do really share a lot of good knowledge. Let me tell you, like, I do not get much time to do study only, like, this thing. I have so many other things to do. But there are some people in our group who are very focused, including, like, Sunil Kamath, and there are some more. Okay. Right now, it's not coming there, this thing in mind, because Sunil Kamath joined long back. Okay. That's why I can remember. And first, he was asking me, like, why you are talking about all his workshop, right? So now everywhere, he always, like, I can see always he advises, okay, please complete the workshop, please do the workshop, right? Because he also has come from that. Okay. So now everybody, please join the Telegram group. This is very helpful. Let me tell you, it's very helpful. Okay. Thank you so much, guys. Good night. See you next Wednesday. Bye-bye. Good night. Good night.
Good night, sir. Hello?
Yeah, I can hear you. Your mic is still on. Yeah.
Oh, sorry about that. Just an add-on question. You mentioned that, you should look at service when picking an app. So bank actually gives a good service, even though they are not direct mutual funds, which you buy through a bank. So should I still go for that?
You can do that. In fact, I have been doing it for quite long. In fact, since recently. Only thing is that, you see, most of what you can do when you are choosing, do not listen to them, right? So since they are also agents, so they will advise you only those funds where they get the maximum commission. Let me tell you bluntly, this is what they do. Okay, choose your own fund. So how to do? Suppose you have, most of the time we are looking for a 5-star fund. You have seen all the 5-star funds, they are direct funds. Okay, so what you can do, you just say, like, so say Canada Robeco Blue Chip, direct is the 5-star fund. They will not invest in direct fund, okay, because otherwise they will not get anything. They will invest in Canada Robeco Blue Chip regular fund. Okay, So whatever is the difference, that is the commission they will get. Okay, but I also used to do that. I choose that 5-star fund. So 5-star funds are all direct funds. So I tell them, okay, buy this fund. So they buy the regular fund. So few percentage commission they take. I lose, I miss because as commission. Okay, so same thing you can do very simply.
Okay, otherwise I'll have to go through a app like a
Otherwise,
coin
go
or
to
something.
yes.
Have to learn that. I have not done that yet. So
yeah, so you
and I
can
have
start.
good
You can
agents.
always start. Yeah, you can start that.
Okay.
You can start that because you see, like, since you have knowledge now, so yeah, you don't need an agent actually. So it depends on you, how you are, how you comfortable you are, Okay.
Got it. Got it. Thank you, sir.
You're
Good
welcome.
night.
Okay. Bye. Good night.